The problem is that's a fundamentally boring get-rich-slow message, which gets drowned out in this kind of modern zeitgeist world of, YouTube videos and social media and things by crypto bros or FX trading people, or, saying, I can make you 100% a year and change your life in 10 minutes. And, one of the tragedies of the current age, I think, is that people are knowing that they should become financially literate, and they think, I should understand this finance thing, and they're going straight past the boring stuff that's existed for 2 centuries and actually works probabilistically to the whiz bang, oh, look at this, kid in a Lamborghini who seems to be living a wonderful life that obviously he's rented, Lamborghinis and private jets, and you can make 100% a month with my trading course, which is getting a lot of people in a lot of trouble. And one of the things that really agitates me about that is the fact that regulators all over the world have really failed to address that issue. That is part of the challenge of a 5-year or 4-year electoral term. It's an inherent, as I said, our political system was created X hundred years ago and is poorly calibrated. Because there's a great quote I heard recently, and I can't remember which politician said it, but it was like, we know exactly what to do. We don't know how to get re-elected after we do it. But it has a serious dark side, which is understood, in my opinion, by almost no one and no politicians. And the rise of passive is front and center one of the reasons we have massive wealth inequality, right? Because basically, when hundreds of billions of dollars flows unthinkingly without regard to price or valuation into the top 500 stocks in the world, and 60% of that flows into the top 50 of those 500 stocks, that is why Tesla is on 400 times trailing earnings, and that is why Elon Musk is valued at, is notionally worth $800 billion. When we had before we had all these total distortions, that is not capitalism. To your point, that is a kind of crony capitalism, because my understanding of the reason that that's been so supercharged is actually because Vanguard, BlackRock, and State Street have so effectively lobbied economically illiterate Congress people. They've miscounted the population already to the tune of 300 million. And it's something to do with how all the local government folks are incentivized to report. Like, they get funding based on the number of kids that are going to go into the schools. So they report, and they have a really imperfect birth certificate situation. And it's literally of the order of 300 million. There are 300 million fewer Chinese people in who exist than actually what the government stats say, which is, this stuff's pretty interesting. That's probably quite... I've made this point before, is that, that we definitely have a very volatile and potentially quite frightening few years ahead of us, I think, with how this all plays out.
I'm your host, Fazan Irani. Let's connect the dots. On Connecting the Dots, we explore how money, markets, and power intersect and what that means for ordinary investors. We try and focus on one core question: how do you protect and grow your wealth in a world that feels increasingly uncertain? Today's guest has spent decades inside the financial system, from Capitol Hill to global equity markets, meeting over 1,000 company management teams and advising on major transactions. He's also the best-selling author of How to Own the World and is on a mission to dramatically improve financial literacy. If anyone's serious about long-term wealth preservation, this conversation matters. Andrew, welcome.
It's so great to be here. Always an honor, and thank you very much. I hope I can follow up with something that is sufficiently valuable that the conversation does matter. Let's see how we go.
I'm definitely sure it's going to matter, right? Because on the show, I obviously am very conscious of who I bring on the show as well. And I think you and I think alike. We align on our thought process, where in today's world, the financial education is quite poor, whether it be in our normal government education system or even private education system. And me and you have been in the nooks and crannies of the financial system itself, and we realize how people working with us don't even understand the system sometimes. So you just want to talk us through, Andrew, how did your career so far, and how did you get into all of the above that I mentioned?
Yeah, sure. Okay. Well, I mean, plain vanilla, I did a joint honours degree many moons ago in the mid-90s in economics and politics. And actually, for what it's worth, I always think of myself as an economic historian or a sort of political economist. I think that's quite a different thing. You know, economics has become such a dirty word, and what's that great quote, like, economists exist to make astrologers look good or whatever, you know. But and there's a lot of cynicism about economics, and I think that it's really important to kind of differentiate between sort of mathematical economists who spend their time modeling up stuff with really poor assumptions about how humans behave rationally, which is, I think, why an awful lot of the models have been so, caught short in recent decades. They are getting better at that, by the way, as sort of behavioral economics is in the ascendancy. But I think a much more valuable approach to trying to say something substantive about policy or about capital markets is actually to be more of an economic historian, right? Because, like Mark Twain said, history rhymes. So if you are willing to study the patterns of history, as leading lights of the industry like Ray Dalio are quite good at doing that. You can't always get it right, but it can give you pointers as to how you think about the big asset markets and big picture things like what the stock market is and what it's for and stuff. So that's where I'm from, intellectually, if you like, without wanting to sound too pretentious. And then just career-wise, I was super lucky in that I got an internship on Capitol Hill like the day after I finished my university degree, which was a bit every year back in the day. 12 Brits could go to Washington and work as interns on the Hill, and 12 Americans went to the UK and worked in Westminster. And that was pure luck. I just lucked out in the interview process, but it was an amazing experience. And I think that was the reason I then managed to get a job at Swiss Bank back in London when I finished that internship, which I might, I didn't go to Oxford, Cambridge. I went to Birmingham University in the UK, which is a great university, and I got an economics degree. But, back in the day, getting into one of the sort of leading investment banks, it was touch or go whether I'd be able to do that. And the experience in Washington is what sort of kicked me up into that being a possibility. And so I started in Swiss Bank in the late 90s. And I guess the only other thing I want to say is that ever since then, I specialized for most of my career in smaller company equities. So being really close to management teams, and that's necessarily a generalist thing. So you meet companies from every sector of the economy, whether that's, an airline on Monday and a brewer on Tuesday and a retailer on Wednesday and a software company on Thursday. And you have access to the senior management teams, because when you do smaller companies, you actually meet the CEO. So I did smaller companies. I was very lucky to have access to senior management and see companies from every sector. And did that for my whole career until about 10 years ago. I morphed from being a generalist small cap equity guy into being a specialist in biotech, in life sciences, because I was offered a role at a little boutique investment bank, and it felt like a good move. And so that's why my third book is about the biotech sector. But I basically an author of 4 books, 3 of which are about personal finance, big picture, and they're all about financial literacy and trying to democratize a proper understanding of how financial markets work in a very big picture, kind of durable, evergreen way. And one of them, slightly randomly, is about biotech, and it's called Our Future is Biotech. And so the only other thing to say is, about 10 years ago, I started a business called Plain English Finance with the website plainenglishfinance.com. And the idea is that kind of does what it says on the tin, in that I think one of the preeminent problems of our age is that financial literacy is so poor. And one of the analogies I use is I always say that, learning how to drive your finances to a life-changing outcome is no harder in terms of the number of hours required to acquire that skill than learning how to drive a car. And it's just that, it's like if capital markets were invented 300 or 400 years ago, depending on whether you're talking about stock markets or bond markets, right? I mean, bond markets kind of, probably the Venetians in Italy 400 or 500 years ago is when bonds properly, what we'd recognize as a bond sort of emerged around that kind of time. I mean, there are academics that say even further back than that. Equity markets basically was the Dutch in the early 1600s and the Brits in the late 1600s. And even though they've been around for that long, the percentage of adults, sentient, intelligent adults in the world that know anything more than just nothing basically about them and use them effectively is minuscule. I mean, I would contend it's literally less than 1% of the adult population comfortably who have a proper understanding of these things and really feel comfortable about what is the stock market, how does valuation work, how do I think about inflation and gold and interest rates, what is a bond, all this sort of stuff. And to me, whereas, for example, so in the UK, 42 million British adults in the UK have a driving license and can drive a car. And I reckon that fewer than 420,000 British adults actually know and understand capital markets properly. And to me, that's a bit like, if a century after we'd invented the car as a technology, only like, 0.5% of adults were using the car, we'd be like, well, that's a waste of a good technology, right? Whereas that is actually, because capital markets, to me, I think this is reasonably easy to credit. Capital markets are nothing more than a technology, and they're one of the key underlying technologies that have underpinned modernity and human progress. And the tragedy is that we've taught that so badly to so few people. And so that's part of my mission, is because, I genuinely believe that being sufficiently conversant with financial markets, that you actually just kind of do some fairly simple things and get things set up properly, with a 2-century track record of that kind of approach working, is life-changing. And one of the tragedies of our time is that very, very few people do that. So that's kind of my mission. Sorry, it's a very long answer as usual, but
No, absolutely. Thank you. And I've discussed this with a couple of guests as well. Obviously, I think it hasn't been taught on purpose for nefarious reasons, because if only 10% understand, then they can not only charge a fee, but they can use the 90% labor to tell them, you're too stupid to understand all of this. Let us manage your money.
I have a certain amount of sympathy for that opinion, although there's a great quote, which is like, never attribute to malice that can be explained by stupidity or incompetence. And I actually think, it's just one of those, I don't think like nasty, I think there are nefarious participants in capital markets, right? There are lots of bad actors. There are lots of bad actors in every walk of life. But I think the reason that most, people in the world just don't engage with finance isn't because there's some sort of huge conspiracy. Because ultimately, if there was a huge conspiracy, then there wouldn't be thousands of books about how to invest that are widely and inexpensively available on Amazon, right? There's no...
No, I don't. I totally agree with you, Andrew. But what I mean is, our education system doesn't teach us anything about money. The whole world revolves. 50% of every transaction in the world is money. But if they teach us how to be engineers and how to read English and Spanish wars and all of that, history and geography...
Well, and even more crazy, I make this point a lot. So I've got a degree in economics from a reasonably good British university. And when I graduated, I think a lot of people don't understand this who've not engaged with capital markets, professionally. A degree in economics doesn't teach you anything that's of any, or very rarely, like most degrees in it, there are much more sort of hands-on professional kind of finance degrees, but a broad learning about kind of academic economics does not equip you to really understand how to navigate company valuation or multi-asset investment, or the role of gold or precious metals in the financial system, or any of that stuff, which is the tangible hands-on, how do you actually perform and deliver a life-changing financial result for you and yours. That is not taught in most economics courses. So yeah, even economists don't really understand this stuff. But I think that's just, again, it's just one of those societal blind spots it's not through any kind of, it's not Klaus Schwab and the the Davos.
We'll go there.
Yeah, okay. Well, it's not the Davos elites like preventing us from learning this stuff. It's just not conventional to learn it, and that is a big part of what I want to change. And I think you and I were talking about this before you click record, but there is an awful lot more. There's a much better understanding amongst a lot of people in the world that this stuff is important and it's neglected, right? And people are going looking for information. One of the tragedies to me is that growth in that reality, which is a function of social media and, the growth in the internet and YouTube and Amazon selling books inexpensively and all that good stuff, a lot of the information is really bad. And for the last decade plus, I always joke about the fact that I'm the boring old man. Like, I talk about stuff that's worked for 2 centuries, which in Britain with British accounts means your pension and what's called an ISA, which in other countries are called different things. Like in the States, that would be a Roth IRA and a 401k, right, or whatever. But I talk about these things, which is investing, not trading, right, and which is something you do every month reliably into a sensible mix of assets, age appropriately, in the right accounts, which are tax sheltered accounts. And if you do that thing for 20 to 40 years, you will get a much, much better outcome than people who don't do that thing. And that's really easy to credit. The problem is that's a fundamentally boring, get rich slow message, which gets drowned out in this kind of modern zeitgeist world of, YouTube videos and social media and thing by crypto bros or FX trading people, or, saying, I can make you 100% a year and change your life in 10 minutes. And, one of the tragedies of the current age, I think, is that people are knowing that they should become financially literate, and they think, I should understand this finance thing, and they're going straight past the boring stuff that's existed for 2 centuries and actually works probabilistically to the whiz bang. Oh, look at this, kid in a Lamborghini who seems to be living a wonderful life that obviously he's rented, Lamborghinis and private jets, and you can make 100% a month with my trading course, which is getting a lot of people in a lot of trouble. And one of the things that really agitates me about that is the fact that regulators all over the world have really failed to address that issue. I'm regulated by the SCA in the UK. I have to record everything for 6 years. I have to, do 100 things a year for filling in forms and, this, that, and the other, jump all these hurdles, spend loads of money to be that and remain that. I could wake up in the morning next week and decide that I'm a crypto influencer, start a YouTube channel and start charging people £3,000 for my course with absolutely no regulatory oversight at all. They make noises about that, but de facto there isn't. There are thousands of people doing that and losing people, life-altering sums of money. And I've seen that firsthand in my journey in the last 10 years, and it really annoys me. But anyway, yeah, sorry, I went off on a right old tangent there, but...
No, it's absolutely fine, right? You're really passionate about this, just like I am, and you've seen it in the UK as well. But was there a seminal moment you realized this wasn't just a career, the financial education piece, but something that needed fixing? Was there a moment there where you just went, the light bulb moment went off and you just saw the opportunity?
Yeah, well, there were several. I mean, very early in my career, I was sort of learning about, capital markets on the bond desk at SBC Warburg, as it then was. It then became UBS in the merger, and then I moved to equities. And I remember talking to a lot of my sort of senior colleagues about what they did with their own personal finances. What do you do with your pension, your ISA? Where are you invested? And, a fair few of them were quite sophisticated and had good answers. And a fair few of them said, I don't know, I don't really worry about that. I've got a financial advisor who takes care of that. And I'm thinking, like, you're here, like, at the coalface of an investment bank, being a highly paid professional, giving financial advice to senior fund managers on the buy side, and you don't even run your own money. Like, I'll never forget being on the trading floor once, and a colleague of mine stood up who was sort of in his early 60s and went, "Oh, I've annualized like 2% in my pension for the last few years," and I was like, "What? Like, how is that possible for somebody sitting on the training floor of a major investment bank? Like, what the hell have you been doing?" And so I thought, and look, to be clear, there are plenty of very smart professionals, and I think today that's much less common than it was 30 years ago or 28 years ago when I started my career, right? I think younger people are much more savvy. I don't think the 40-year-old managing director of Goldman Sachs is rubbish at running his money nowadays. Okay, but and maybe it was just a small sample set of my colleagues on a particular trading floor or three over the years, but that was a moment. And then just the number of times I'd be on holiday and meet a couple, and we'll all be having drinks. And there was one time I was in a bar in New York and I met this Swedish guy, very cool guy, fashion photographer, obviously made a lot of money. And it was like the 100th time somebody said, "Oh, I'd never invest in the stock market. I'm only cash and property for me." And I was like, dude, that's like, I mean, obviously we're very boring men having that conversation in some, bar in New York, or whatever, but we were for whatever reason. And I just thought, oh my God, there's such a knowledge gap amongst, even highly paid professionals in all walks of life. To think that the stock market is risky just means you really are ignorant of how to engage with and how to use the stock market, right? And how it can work over long periods of time. And sadly, without wanting to go down another rabbit hole, just whilst it occurs to me, the British regulatory and political elite in this country demonstrably don't understand the merits of equities. Because if they did, so 30 years ago, 50% of British pension fund assets were in British equities, and we had a thriving IPO market. We had a thriving equity scene. I floated EasyJet back in November 2000. I was in this. I floated it. I was part of it. I was a junior member of the team that raised 200 million quid for EasyJet to buy a load of 737s. You could not float EasyJet in London today. You couldn't even raise that money today in London. And this is like 26 years ago, right? And the reason for that is because the regulatory decisions made and the decisions made by the political class in the UK mean that we used to have 50% of British pension assets were in the UK equities. It's now 2.8%, which has been disastrous. That's probably cost British people and the British economy £20 trillion, £460,000 per working age adult. It's not even an electoral issue. A tiny percentage of the population understands. So like, all of these sort of things, to answer your question, all of these conversations, all of these thoughts added up to a point where I was just writing, and I alighted on the URL in about 2011. I bought the website plainenglishfinance.co.uk and plainenglishfinance.com, and I thought, yeah, that does what it. Plain English Finance, that's a good brand, and so that's what I kicked off. And I was just writing about gold and about why the stock market is important and the history of the stock market and the fact that nobody's financially literate and all these topics. And I suddenly sort of woke up one day and went, oh, I've written 100,000 words. And actually my cousin said to me, Andy, I don't want to read 4,000 words on a page and then click to go to the next one. Why don't you put this in an ebook? And I was like, duh. So, so that turned into a book. And then all of my books since then, so I just published my 4th one, and I'm sort of semi-working on my 5th one at the moment, happened because, and I've heard much more celebrated authors than me make this point when you're a writer and you're an author, is you get to a point with writing a book where you just have to write it because it's all this stuff's in your head and you're so desperate to share the information. You're so annoyed that seemingly the world doesn't know this stuff that you just feel that the bolted on need to get it down on paper and share it. And that's how all of my books came about. And, happily, if anybody's watched me on a previous podcast, they'll just roll their eyes because I repeat myself all the time. But, it wasn't only my grandmother and my mother writing 5-star reviews and buying copies of my books. Once I got nights, my first one, How to Own the World, quite quickly started selling a lot of copies, and I got a lot of inbound saying, thanks so much for this. This is really helpful. So I kept doing it, basically.
We'll go a little more into the books a bit later on as well. But there's a good point you touched on there, like the ministers and the government policies and all of that. I've seen a trend as well. I actually believe there should be a bit of financial education. If you haven't run a successful business, you shouldn't even be allowed into politics, to be quite honest, because I think they're just puppets who are in the front. They're put in front to change policy. They don't understand anything about, forget money. They don't understand anything about geopolitics or anything like that as well. If you had to look at it differently, not from a conspiracy lens, but do you think most politicians around the world are ignorant? Or again, let's go there. Is it nefarious where they don't want, because again, let's go to the West, right? You'll own nothing and you'll be happy, and the agenda and the Western democracies and the G7 countries committing suicide. Where do you, just a personal, if this conversation resonates, it usually means you're already sensing that the world of money is changing faster than the advice most people are getting. These conversations are really about helping people think more clearly. Not predictions, not hype, just understanding how the system actually works. So if this episode helped connect a few dots for you, liking the video, subscribing to the channel, or sharing it helps these ideas reach others who are asking the same questions quietly. That's how we grow together, one thoughtful conversation at a time. Thank you.
Yeah, I don't actually. Again, I go back to that quote, never attribute to malice what can be attributed to stupidity or incompetence. I've said that twice now with apologies, but I just think there are all over the world, there are loads of sort of intractable systemic challenges to political systems that are really quite long in the tooth, right? So, I mean, one of the points I was making the other day is, so the UK, I think I'm right in saying, has 650 members of parliament and like 900 lords or whatever. It's that order of magnitude, right? And 650 members of parliament is a number that's calibrated for an era of horse and cart and snail mail, right? The constituencies in the UK are so pathetically small. It's like, you win a majority with like 28,000 votes, right? We have hundreds of niggly little, tiny little constituencies of, Clumpton on Mud and Old Wealth on Sea and all these ridiculous little comedy little constituencies in the UK. So we have 650, and forgive me for saying this, but I think in the main, pretty mediocre people. Nobody truly ambitious or truly good. Nobody very, very successful commercially is going to become a British MP. There are a few mission-driven people who a lot of whom have already made their money, and therefore then they want to give back and they want to go into politics. But a lot of the people who are career politicians on both sides of the political spectrum in the UK are people who, would not have been able to get a senior role in industry of any kind, right? And they might be, and that's really harsh, but, that's why I think it's basically true, and that's why our policy is rubbish. It's not a very well-paid job, and if you're a very, very talented, successful person, why are you going to go, and you do need to make money and you've got kids to raise and you've got a mortgage to pay. Why are you going to go and earn, a quarter of what you could earn being a senior professional in any number of other industries, right? So that is an intractable problem. And my solution to that, which is super unpopular because of just how left-leaning the UK is, but if you're someone, in my experience of having met 1,000 chief executives in my life, I'm somebody who believes in the fact that, Beethoven writes a lot of beautiful music in a way that 500 mediocre composers don't, right? Excellence is a very real and an empirically demonstrable thing. Nobel Prize winners cure cancer or advance stem cell therapy. So if you want great outcomes in terms of policy and progress, you need excellence in politics. You need people who, to your point, you need competence, you need excellence. You're not going to get excellence when you pay people salaries that are a fraction of what an excellent person can get paid somewhere else. So one idea I would have is, look, the US has got 465 or 435 congressmen for a population of 350 million. Britain's got 650 MPs for a population of 66 million. There's something wrong with that number, right? And the US has got 100 senators and we've got 900 lords. Our whole political system is very top-heavy. It's therefore very expensive, even though we underpay these people. I would say chop them all and have 100 really, really high-quality people, because with the communications technology we have nowadays, why do you need to calibrate your electoral constituencies in a country for the horse and cart and snail mail? You don't. People now, we all have email lists today. We all have access to the internet. So I think you could have 100 MPs in the UK and pay them 6 times as much, and you might actually get some good policy from people who have a clue what they're doing. I know that's really harsh, with apologies to any MPs watching this. You probably think I'm a complete arse for saying that, but you look at even just the public speaking ability of some of our politicians nowadays. It's just woeful, right? And to your point, like, I hate sort of personal character attacks, but as a simple statement of fact, Rachel Reeves, the Chancellor of the Exchequer in the UK, became an MP at the age of 31, right? And whether or not she lied about being a chess champion, which apparently she did, she wasn't a chess champion. She was like 50th or whatever rather than first, according to some of the other chess players, including the CEO of, who's the guy in the thinking game, the CEO of DeepMind, Demis Hassabis, the guy who won the Nobel Prize in 2024. It's a great documentary, by the way, The Thinking Game. It's about DeepMind and AlphaFold, the protein folding IP they developed. But, I think he said he was a bona fide chess champion. And I think it was him that said, I never met Rachel Reeves. I'm the same age. I never saw her in any of the tournaments. Or whether she lied about the level of seniority of her role in banking, retail banking, before becoming an MP. But parking all of that aside, the simple fact is she became an MP at 31. My view is this isn't something you can legislate for, but it certainly should be convention. And for much of history in Britain, it was convention. You should be nowhere near being Chancellor of the Exchequer unless you've had a 40-year career in front office capital markets. And you have a deep understanding of bond markets, commodity markets, equity markets, because I think we live in an era where people don't understand the sheer level of nuance and complexity and the value of experience and actually being at the coalface of doing things in the real world to then be able to understand and craft policy that works, because it's bloody complicated. And when I see, some of the policy decisions, many of the policy decisions that are being made by Rachel Reeves, And growth is our number one priority. Well, everything you're doing is inimical to growth and is going to achieve 180 degrees. So you're either incompetent or dishonest. But as a statement of fact, it must be one of the two, because you're saying I want to go for growth, and every single policy you're doing is obvious to anyone who has any experience of these things. And even something as nuanced as, the challenge I articulated a minute ago, British investment funds and British individuals used to have a lot of their capital invested in British companies. And today, most of our capital is invested in Tesla and Apple, right? And that has been absolutely tragic for the British economy and ruinous of, the ability of British entrepreneurs to raise money. We have the best life sciences IP in the world. Oxford and Cambridge have won more relevant Nobel Prizes for the biotech industry than anyone else, basically, in the world, certainly per capita. And that is an $8 trillion industry where Britain's probably made a few low hundreds of billions out of it, even though it's our IP. That is front and center because we can't scale up businesses. Our stock market is screwed, and that is because we've exported all of our capital. And this is a huge theme I've been writing about a lot and talking about a lot. The solution to that is to reinvigorate the UK, the London stock market. And there's this thing called the Mansion House Accord that's been pushed by Rachel Reeves and by a lot of the big pension funds, where all of the focus is on early stage private and VC-backed companies. And my contention is that the reason that she's missed the fact that the real problem is with stock market listed companies is because she has no experience of such things. And the slickest, best lobbyists are the VC and PE people, right? So she is convincing 19 of Britain's biggest pension funds to allocate way more money to VC and PE funds at exactly the wrong stage of the cycle, when VC and PE's biggest challenge is there's no functioning IPO market anywhere in the world because all the money's going into passive to put Tesla on 400 times earnings, right? And so we have a chancellor that, as I observe this, literally doesn't understand that, and that's why the policies are so bad, and is being nobbled by, a very slick industry for whom, which is all satisficing behavior where they'll be the beneficiaries financially. If you had a more enlightened chancellor who'd had 40 years of experience and really understand this stuff, that wouldn't be happening. And I don't want to sound sexist or make it a personal character attack, but the reason I care so much about this stuff and it agitates me so much, as you can probably tell, is because this is ruinous for the lives of tens of millions of British people, the real lived experience. Outside all of it. So to your point, I mean, I don't think there's any great big puppets on a string. I think the world is too complicated for the Davos elites to be controlling. I just think, structurally, there are an awful lot of extremely incompetent people in government. And if I'm a final thing before I shut up, just because it might make you laugh, it's a lovely little story to that point. So do you remember when Mark Zuckerberg went in to be interviewed in Congress, right, about the internet, like online advertising and the impact of social media on teenagers, and the questions asked by the assembled, politicians were just so bad, and it was just toe curling. And Mark Zuckerberg you could see he thought he was having an out of body experience. It's like, these people literally don't even understand what the internet is. But here's a really lovely one. So not that long ago, there was like the chairwoman of one of the most important committees in Congress. It wasn't Ways and Means. It was like one of the educational congressional committees was doing a speech, like reading from a teleprompter. And I want to say she was like probably of quite advanced years. And I've been meaning to go and look up who this was, because I saw a clip of it and I heard it anecdotally and I thought that's mad. And then I didn't go back. But what I wanted to say vis-a-vis the competence of politicians is she was saying, and it's so great that all of our children in elementary school are now going to get A1 as part of their education, and meaning AI. But she was reading the teleprompter and she's so completely clueless that she was just reading the teleprompter that somebody had written this speech and literally didn't know that what AI was. But she's making a speech about education in America, calling it A1. That is the level of political. Or you have politicians saying, sorry, what's this QE you keep talking about? And it's like, there's no like nefarious master of the universe, Rothschilds, lizard people. There's just a lot of really incompetent people who shouldn't be anywhere near policy.
I totally agree with you, Andrew. This first of all, I think Joe Biden was doing the same thing. Obviously, he was old and all of that, but we understand the nefarious part is they purposely put stupid people in power positions because they're that stupid to see through the nefarious plan because they can't think past the tip of their nose is what I'm trying to say. Because if you otherwise logically, I'm not saying they're not stupid. I think they are stupid. And that is why some of them are in the positions that they've been put. People like you and I would not be allowed to even get close to those seats because we would want to change the country's.
Yeah, well, you mean so actually we wouldn't get finance we wouldn't get like McDonnell Douglas and Vanguard and BlackRock funding our campaigns because they'd worry we'd be too independent thinking when we got into power. I've never thought about it like that. Maybe that's part of it.
Yeah, that is exactly what I believe because I do the whole macro and the geopolitics and all of that as well. And if you have stupid people in powers of position, you just need to tell them the next one or two steps because they can't think through far ahead. And they're also thinking through a logical sequence. And they're also not thinking, as I said, a complex theory. So they're only thinking, oh, you're going to help all these, we're doing all these social policies like you see now in New York and stuff. New York's in that much debt and they're turning into socialist utopia, so to speak, but they're running out of money. So they're going to raid other people's pension funds and all that kind of stuff. And all the bigger businesses are leaving those countries.
You look at footage of Detroit and Gary, Indiana, and all these places that have had really sort of harder left-leaning policies. They're literally like burnt out cars, and it's awful. And I think New York's, there's a risk New York's heading in that direction now because of this, and it's just tragic that people are so poorly educated about what actually works and the policy that actually delivers better lives that they vote for this stuff. And that's one of my big fights. I think there's a huge element, and this is really powerful in the UK at the moment, of what I call turkeys voting for Christmas, which is like people, young people in the UK voting for the Greens or socialism or whatever, and thinking that there should be really high wealth taxes because they literally don't understand things like the Cantillon effect. That the bigger, the government is the biggest it's ever been in history and everything's rubbish. So is the answer more tax and for government to do more? No, it's not. It's like it's caused the whole problem. People don't understand the Cantillon effect. If government's massive and borrowing loads of money, then that creates inflation. Who benefits? The rich. Who gets screwed? The poor. Because that inflation is disproportionately in energy, food, housing, all the things that the poor make up a massive percentage of the poor component of the population's monthly expenditure, and rich people benefit because all their asset prices go up, gold and equities and property and whatever. And like people just don't understand these mechanisms, and so they vote for more of it. And that is one of my that's my fifth book, as I'm trying to set this all out in a really evidence-based way to try and convince young people in the UK that this is not the answer and it will all make their lives worse.
But Andrew, the thing is, you're going to put in so much effort to write this book, right? Me and you are exactly passionate about this thing. And I was interviewed just about 3 weeks back on Money Talks in New Zealand. And the host asked me saying, hey, if I was a politician, I would just go out and tell people we're in the deep poo-poo. We need to recover the New Zealand budget and all of that. And I said to him, Paul, the thing is, you're thinking from a good citizen point of view. Politicians, the minute they open their mouth, they're lying. So if they tell you we're in trouble and they're going to cut back the social benefits, they won't win the re-election. So they're only there for like the 3 or the 4 year cycle. And the unfortunate thing is, again, I think when I was speaking to Rick Rule, it is us also to blame, because not us as in you and I, but the average citizen, because not only are they not educated, but the minute it gets tough, we don't want to swallow the tough pill. If you said 3 or 4 years of hardships and the country comes out on the other end, how many people will want to do that? They won't. And that is why I think the politicians don't tell you the truth either.
And that is part of just the challenge of a 5-year or 4-year electoral term. It's an inherent, as I said, our political system was created X hundred years ago and is poorly calibrated. Because there's a great quote I heard recently, and I can't remember which politician said it, but it was like, we know exactly what to do. We don't know how to get re-elected after we do it. And that is a problem. Although what I would say, as a counter argument to that, and we're not out of the woods yet, but the early signs are encouraging. If you held a gun to my head and said, which country are you most bullish of on a 10 to 20 year view, I would answer Argentina. But I mean, because it's amazing and the people are beautiful and the wine's great and the food's great and whatever. But and Buenos Aires is like Paris with better weather. But actually, Javier Milei is somebody who's managed to articulate as a proper economist who actually properly understands all of the stuff we're talking about, which is very rare to get, for that person to then become president of a polity. But Javier Milei, not only has he managed to articulate it and win the election, he's then navigated the massive challenge, the incredible volatility and sacking loads of government workers and doing the whole chainsaw thing. And he's won the next election, or at least the midterms that he won the other. And, I think, and inflation's gone from 300% to 12%, or these aren't accurate numbers, but it's that kind of order of magnitude. There's been a complete explosion. Rents are down massively. Affordability is much better. And it's early days, but I think he is a wonderful, potentially really good test case for there's a chance that somebody sufficiently strong with conviction who actually knows what they're doing gets involved. I mean, look, these things are incredible. I think in Britain, we've got and America's got the same problem. There's such a public sector blob of, it's like the barnacles on a boat. You have to pull the boat out and scrape all the barnacles off, right? Before you can, the barnacles on the boat of the British political system is just so over the, quangos and all this stuff we have in this country. I think
in the US, the government spending is about 45% of GDP. If the government pulls back, the GDP suffers as well. The public servants and stuff like that, right?
Do you know Bill Bonner, who used to own? He writes a lot about like how ridiculous. If you've got $38 trillion of debt, then you've produced $38 trillion of GDP, but you've got the debt that goes with it. That's not as good GDP as actually companies making profits and real economic growth. And that's obviously America's been able to do that with the reserve currency by basically sucking in resource, using its position as the exorbitant privilege, as Charles de Gaulle described it, of having the world's reserve currency for decades. And that's part of what's going on right now. That's all in the process of falling over, which is why if you said, where do you want to live for the next 20 years? I think I'd probably prefer to be in Buenos Aires than Los Angeles, or certainly New York, for obvious reasons. Who knows? They're said against that. There are powerful elements of the American, the way the American economy works, like robotics and AI and biotech. And, there are a lot of really smart people deploying capital and doing incredible things. It's the kind of Elon Musk argument that if you generate enough aggregate economic wealth, that can mop up all the inflation and all the liquidity and all the debt. And maybe that's what happens. Let's certainly hope it goes that way, because the alternative is a very unstable couple of decades ahead of us.
Totally agree. And just one last thing, Bruno says, what you said, Argentina as well. I think only after the people finally tried everything with socialism and their inflation rates were that high, they just couldn't see their way out of it. They just said, they threw in the towel and they just said, to hell with it, we'll just vote for an outsider who might just change it. And now they're seeing the benefits of it. And I, as I've mentioned, when I get interviewed as well, I think there is a turn of century event kind of coming around 2032, when bond markets would collapse. There will be sovereign defaults, especially the G7 countries with a lot of debt will collapse their systems. And I think that's why we see the Ukraine war and all that stuff higher. As you all know, I'm Fazan Nurani. After more than 20 years inside banking and finance, what became clear to me is that the biggest financial mistakes aren't product mistakes, they're thinking mistakes. If this conversation resonates, it usually means you're already asking better questions than most people. So if you built wealth, follow the rules, and still feel there's a bigger picture missing, that's exactly the work I do with clients privately. I don't offer generic advice, and I don't work with everyone. But if you value clear thinking, a strategic perspective, and calm decision-making, you can apply for a private conversation via the link in the show notes below. Thanks for watching.
Yeah, I agree. And silver and gold doing what they're doing. And, I think that, look, I probably sound crazy and I could regret saying this, but I think silver and gold are in the foothills of where they can get to price-wise, because all it is a ratio of silver and gold, extant stock of silver and gold to extant stock of fiat currency, right? And they're not even, that is not equalizing. It's not even close to equalizing yet. And yet all the terrible talking head analysis. I was about to say you get from people like the BBC. I don't think the BBC's mentioned gold or silver once in the time that they've gone up from, gold's gone from. They might have mentioned the fact that Gordon Brown, the British Chancellor, sold all of our gold at $275. Now 5,100. Well done, Gordon. I mean, there you go. There's another example. Political incompetence, the absolute abject incompetence. But no, there was another. I think you're right, and I guess I hope that the way we navigate from the current kind of zeitgeist to the next one is as peaceful as possible, because historically, I was doing a podcast the other day and we were talking about how you had the agricultural revolution, financial revolution, industrial revolution, technological revolution, and 2 world wars. You had the Luddites, you had 90% of people working in agriculture and working on the land, and then within decades that was 1% of people. And a lot of that everyone had to, before we had like airline pilots and hoteliers and influencers and all these new jobs that the new world created that had to come through a few decades later, we had a huge dislocation where lots of people went from actually, if you were lucky enough to live in a fairly productive agrarian society in like rural England, that was probably a better life than going and working in a factory in Manchester, 6 days a week, as a 9-year-old kid, right? The dark satanic mills and all the Charles Dickens novels about all that stuff. It was pretty awful. And that is part, there's an argument that it was that instability and that big sort of cohorts generational change that created the causes that seeded the First and then the Second World War. And what I pray happens, this time around, we are hopefully more enlightened and learn the lessons of history. But I mean, I actually only some obviously quite young people put a post on my YouTube channel, which I answered at 5 o'clock this morning when I first sat down at my desk, and saying, "Oh, capitalism's." Am I allowed to swear on this podcast, by the way? Well, no, I won't. If it ruins the algorithm, I'll say capitalism is rude words. The revolution is coming. And I replied saying, mate, be careful what you wish for, because what a revolution means is millions of dead people and life being absolutely miserable for decades based on the very clear record of history. Let's hope we can navigate to a better outcome. We need a course correction, and let's hope that cooler heads prevail and we navigate to a better outcome with better policy. And by, learning the lessons of history and deploying the right ideas that lead to, I say this in all of my podcasts, or most of them, I try to remember to. I'm a Benthamite, right? The British political philosopher Jeremy Bentham, the basic axiom of his thinking as a philosopher is, when you consider policy, you should aspire to get the best possible outcome for the largest percentage of the population. And I believe we're not achieving that at the moment because most of our politicians are completely clueless and have failed, who don't understand economics, and they haven't learned the lesson of history. They don't understand money. They don't understand problems in the fiat system. They're just not sophisticated enough, and they're not educated enough about history and how this stuff works. And that's why we have bad policy, which is creating horrible outcomes for tens of millions of people all over the world. And the antidote to that is that we have better policy, and that's a better outcome than a revolution.
And Andrew, there's something out there also, as you said, the younger generation who commented about capitalism, right? The problem is capitalism isn't the problem. Crony capitalism is the problem, but they haven't been taught that. They just blame it on capitalism, just like they did blame everything on fossil fuels. And the green agenda has come about, and then suddenly people don't have power in Europe, and there's no electricity, and the electricity bills have gone up 300%. Where do they think they magically come from? Without energy, there is no security.
So for example, I was just scripting. I just shot my latest YouTube video earlier today, and one of the point I was basically talking about. So one of the single most important themes of the last sort of 30 years, which I know you know about, and Tim Price, one of your previous guests, talks about a lot, is the rise of passive investing, right? So, and it's like one of the at face value, isn't passive great? ETFs enable hundreds of millions of people to have a fractional investment in hundreds of companies or even thousands of companies as they buy the MSCI World or whatever. That all the things equal, that is a great invention that's allowed people to invest in financial markets, right? But it has a serious dark side, which is understood, in my opinion, by almost no one and no politicians. And the rise of passive is front and center one of the reasons we have massive wealth inequality, right? Because basically, when hundreds of billions of dollars flows unthinkingly without regard to price or valuation into the top 500 stocks in the world, and 60% of that flows into the top 50 of those 500 stocks, that is why Tesla is on 400 times trading earnings. And that is why Elon Musk is valued at, is notionally worth $800 billion. When we had before we had all these total distortions, that is not capitalism. To your point, that is a kind of crony capitalism, because my understanding of the reason that that's been so supercharged is actually because Vanguard, BlackRock, and State Street have so effectively lobbied economically illiterate Congress people and said, oh, active fund management is a con, and, you shouldn't pay an expensive, rich, horrible active fund manager who has yachts in New York Harbor and, 5 houses and flies around the world in private jets. Shouldn't pay them. Everything should just go into an S&P 500 ETF, which is cheap and outperforms. But that is such an unbelievably simplistic view if you look at the bigger picture of how we should evaluate the value of companies and how we deploy capital to do stuff in the world. And, the reason the London IPO market is dead is because all of our capital is in Tesla to put on 400 times earnings, and all the, we've exported £1.5 trillion of our capital to go to goose the valuations of mega cap US, and that so have the Japanese, so have the Germans, so have the Swiss, so have the French, because we live in a world where if US equities become the only game in town and they're doing 14% annualized as they have done for a few years, every asset allocator in the world can't ignore that and has to be at least equal weight, and so it's this huge self-fulfilling upward spiral. Meanwhile, no entrepreneur in London can raise money to try and cure cancer. I mean, I know that from first-hand experience, having spent 10 years trying to do that for people. That's why I wrote a book about it, because it frustrated me so much. We've got like Nobel Prize winning science, well, we can't raise any money. And that is why that is one of the reasons there's massive wealth inequality, and it's one of the reasons that capitalism isn't working. But that is not capitalism, because in a true capitalistic system, Tesla should never be trading on 400 times earnings, and Elon Musk might be worth $80 billion instead of $800 billion. And that's true of every other, person, or, Jensen Huang at NVIDIA or whatever. When NVIDIA is on 100 times earnings, it might deserve to be on 100 times earnings or not. Discussed, but I mean, but Tesla certainly shouldn't be on 400 times earnings, and
it's not just Tesla though, Andrew. I was just going to say, even the Max 7, right? It just become a circular economy, because the whole thing is, let's break this down to 3 things. First of all, I still believe it goes back to the whole nefarious thing, because they bring in politicians who don't understand this, so then they can get away with crony capitalism. The second thing is, obviously, as you said, passive or active. The whole thing is the industry itself has got its claws into it, so they just tell the politicians, look, they're robbing the average person so they can do it cheaper. But the thing is, it's their benchmarks going up. But again, the fund managers also, if you're an active fund manager, and the passive guy, because everyone's in the passive enough, everyone loses money. It's okay, because you lost 3% next to all your peers who lost 4%. If you're an active manager and you place a bet somewhere else and you lose 10 or 15, you might lose your job. That's another insider information why passive and active go along. And the third biggest thing, right, again, comes back to the politicians. Because why do you think even some of the pension funds and insurance companies, they've been mandated to also buy government bonds? They're mandated to buy government bonds when we know that's the worst thing to ever do. So now carry on. Please bring it all together.
A return, as Tim calls it, a return-free risk. Government bonds, a return-free risk. I love that. But well, yeah, and I don't know what the answer is. I guess one of the first steps towards an answer is to get people to understand this stuff. Because, oh my God, I look around the UK, a lot of financial advisors and people working in capital markets do not understand this. They're like, no, passive's great. They're not taking account of the new academic work coming out of places like Harvard and the University of Chicago, like the inelastic market hypothesis. And I forget the name of the two academics, but there's a paper from 2021 that is showing that no, these companies aren't going up based on fundamentals, and they're going up just because of a crazy Ponzi scheme. It is a Ponzi scheme. It's a growing Ponzi scheme, and it's going to end in tears, just like every other Ponzi scheme in history did. And the percentage of people who understand this is vanishingly small. There's do you know Michael Green? Yeah.
And he talks a lot about the passive.
He's one of them, although I do disagree with him on some of the stuff he's been writing recently about Well, that's a bit of an aside. That's just down the rabbit hole. But and then the other one, to your point about nefarious stuff. Have you seen Bill Gurley's work on regulatory capture? So Bill Gurley is a VC, and I forget the name. It's not Andreessen Horowitz. He's at one at Sequoia. He might be at Sequoia. He's at one of the really, really top VCs, and I'm embarrassed I can't remember which one. But he's a brilliant. He's one of those brilliant guys. And he did a TED talk about regulatory capture, which is eye-watering. And it's basically about how, to the point about young people thinking that it's capitalism that's the problem, and your point saying is crony capitalism. Watch Bill Gurley's TED talk about regulatory capture and just how egregious it is. Things like COVID tests, for example, in Europe, are like a fraction of the cost of COVID tests in the States when the COVID crisis hit, because the guy at the FDA, used to be on the board of Abbott Labs and it's just, and in America, it's ironic because America's kind of like this wonderful free market, land of the free, home of the brave, bastion of, red in tooth and claw capitalism and fantastic companies with developing technology and energy and la 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 la. But actually, the regulatory capture piece is so big that's kind of almost more left wing than the Europeans in terms of the role of government and the sort of enormous costs imposed on American society and on Americans of all of the above. And I don't know what the answer is other than make as much money as you can and move to Switzerland. But
Yeah, I think this is happening in all Western. Well, I don't even like calling them democracies, but happening in all Western democracies because the system runs on debt. You get in stupid politicians who do certain things where the debt keeps increasing, as you see, as I mentioned also quite a few times. They never pay off the debt. They just have to roll over the debt, right? And recently, I think UK and France also came out and said they might need a bailout from the IMF, which itself tells you they're kind of reaching that end. And as I said, they're going to use war to justify defaulting or creating a sovereign default. Which country goes first? I think it's going to be someone, either Japan or someone in Europe is the one that goes first. But even with the regulatory capture, do you want to comment, because you're in the UK, my view also, and I've discussed this with Tim, what about like the Goldman Sachs? They bring in like a Rishi Sunak. He comes in, he changes certain policies, and he's out the back door. Same thing in the global financial crisis. Paul Hansen, Goldman Sachs comes into the treasuries, bails out the banks, and then he's gone out the door. So again, people are not waking up and they don't understand these nitty-gritty things. It's people like you and I who do. And another one I just want to touch on, you said the financial planners also don't understand. And I keep telling people when I get interviewed in New Zealand, you don't bite the hand that feeds you, right? So obviously they're going to tell you what the industry wants you to hear because their salary depends on it. Their mortgages depend on it as well. So people like you and I stand out. We actually care about the customers and the clients we advise and the education piece as well. But what's your view on what's happening in the UK with Rishi Sunak and the regulatory capture? If you're
again, all of that stuff, because the counter argument is, to get a job at Goldman Sachs, and then latterly, I think he worked for Chris Holmes' hedge fund, the Children's Fund. I think was one of the top. I think it was the top hedge fund in the world last year in terms of absolute delivery of performance. The counter argument, to get those jobs, you have to be a pretty competent individual. Because Rishi Sunak's the child of two doctors, I think. Who he's not from he married into a very, very wealthy billionaire family, but he was basically sort of robustly middle class, and his parents scrimped and saved to send him to a very expensive school called Winchester, where he excelled. He then went on to, have a great career because he's smart, and his parents scrimped and saved and supported him and all that good stuff. And so did he then end up becoming prime minister because he was super competent and, yeah, but yeah, look, there's definitely that. There's definitely that revolving door thing. The thing about Rishi Sunak that frustrates me so much is, as Chancellor, he exploded the UK debt situation by 350 billion sterling or whatever it is. And you would have hoped that somebody with his background, his pedigree, and his understanding of capital markets would have known just how dreadful that was going to be for Britain. So yeah, I guess I'm I'm coming back into agreement with you there. There's something nefarious going on. But to your point about geopolitics, I mean, it's amazing. Have you read Dominic Frisby's new book about the gold market, The Secret History of Gold?
No, I haven't read it, and I'm trying to get him on the show. So if you can put in a good word,
yeah, sure.
that'd be
Well,
great.
ping me an email to remind me. I don't know where he'll do it, but for me, but I am in touch with him from time to time. He is, but that book's amazing, and I guess the reason I just raised it is because his kind of piecing together of just how much gold China now has. It's like, you know, a multiple of the official numbers. Officially, the US still has the most gold. China has the second most gold. Italy, amazing. That's another place actually as well worth moving to with an enlightened government, enlightened tax affairs, and a whole load of gold is Italy. Because they've got the third biggest gold reserves in the world, which for a country with a population of 50 million or whatever it is pretty good news for them in the next few decades. But
And wasn't there some recent news, Andrew, where the government in Italy was actually asking the central bank to hand over the gold?
Yeah, so Maloney and co were, you know, their basic view is they want to sort of gold back and collateralize to you know, support the Italian economy. And yeah, as you would have it, the Davos elite blob and the Goldman Sachsites and whatever else are not loving that and trying to stop it from happening. I don't know how that will play out, but yeah, sorry, I feel like we're sort of going off of various tangents, but I think potentially China have played an absolute blinder in terms of your point about bond defaults and, you know, the denouement of this fiat money system and what that ends up meaning. And well, if you've got all the gold and that ends up, as it has done for the last 20,000 years, being the yardstick of value that everybody kind of agrees on, they're going to be in a very, very strong position. Although said against that, have you seen all that work on China's demographic cliff? Like, you know, basically there's an amazing picture you can find on social media. I don't know if it's AI, but it certainly aligns with a lot of the output I've seen from fairly smart people who I respect, which is that basically there's a picture of a high school, which is, you know, playground. It's like an aerial picture of a high school playground full of kids playing basketball or running around, whatever, like thousands of kids. And then the middle school's like pretty sparse, and then the primary school, and they're all within shot. There's no kids at all in the primary school. And it's like China's basically about to go from like 1.2 billion people to 600 million people to 300 million people really quickly, which I get, which means on a per capita basis, they could all end up being immensely wealthy. Maybe that's their end game. I don't know.
Yeah, I've actually, and I'm not sure because I wasn't on the ground in China, but I've actually seen some videos as well of not only the ghost towns that they're building, but local citizens walking around saying, see, where are the people? And after COVID, this has sped up quite a lot because India surpassed, because I look at the Asian and I consult on the Asian economy sometimes as well. And Tim and I just had this conversation where he said, oh, India and the Indian consumer will want more cholesterol. And I said, India's again a fake growth story, because if you actually look at the numbers, yeah, the GDP might be growing, but it's debt induced because of a lot of infrastructure spending. And the average person is working on maybe less than $200 a month. So the whole growth story is a lie. The same thing with China as well. I think they have a demographic cliff that they hit, and the population is reducing quite quickly. And as you said, maybe that means they get rich.
There's word that says they've miscounted the population already to the tune of 300 million. And it's something to do with how all the local government folks are incentivized to report. Like, they get funding based on the number of kids that are going to go into the schools. So they report, you know, and they have a really imperfect birth certificate situation. And it's literally of the order of 300 million. There are 300 million fewer Chinese people in who exist than actually what the government stats say, which is, you know, this stuff's pretty interesting. That's probably quite, you know, I've made this point before, is that, you know, that we definitely have a very volatile and potentially quite frightening few years ahead of us, I think, with how this all plays out. But bigger picture, longer term, if all of these, if countries all over the world hit a demographic cliff and all the populations go backwards, and we succeed with refashioning the periodic table to produce, you know, robots and amazing biotechnologies which cure cancer and extend life and health span and all this good stuff, is there actually a future where there are 2 billion people on the planet and they all have the standard of living that's equivalent to like $1 million a year today? Like, you know, on a sort of 40 or 50 year view. I mean, because the point I've made with respect to that is, and I've said it before, but if you were able to get in a time machine and go and put somebody in your time machine that you plucked off the streets of 1850 London, right? And then you whizzed the little, you programmed in and came out in 2025 London and went, check out London. They literally walk out of the time machine and go, this is like paradise. There's no, like, the great stink. Back then, London stank of, feces, both horses and human. Everybody had cholera and dysentery, and nobody had any teeth, and life expectancy was like 45. And, the East End of London was just like people drunk on gin, having fights. I mean, like, Jack the Ripper, whatever. It was the population of London was 3 million. It was way, way dirtier, more crowded, more horrible, poorer. GDP per capita was like $500 equivalent or whatever, right? So you take that person, put them in a time machine, and come out in 2025, and they're like, GDP per capita is $50,000, and you have things called cars, and you can fly to other countries, and and yet people today are more pessimistic about the human experience than they've ever been, like, empirically. And I think there's half a chance that we'll get through this fiat currency denouement and all these geopolitical challenges. But the through-going trajectory of the species is you could have a really lucky population of wealthy people, although ironically, the existential malaise and mental health problems will probably be even worse, even though they're 10 times wealthier than we are today, just as we're, well, way more than 10 times wealthier than people of 2 centuries ago. Anyway, sorry, that's a random aside, but I like to say it just to cheer myself up.
No, it's perfect. I think the technology and all that would be great. The 50,000 per person GDP, I don't think that counts as much because the governments just keep taking more debt, which causes the inflation. So the 500 becoming 50,000 is a common consequence of that. But yeah, well, I get your point that technology has made our lives better, and we can't see what's coming into the future. So let's touch on that topic. What are your views on artificial intelligence and whether it's going to help us going into the future, or is it going to cause a massive deflation because of jobs losses? Or again, we've discussed the population might reduce, and we're talking about UBI and stuff. But what are your views on AI, and maybe go into life sciences, which you're so passionate about?
Yeah, well, I mean, AI is such a, it's such a schizophrenia-inducing topic, right? Because I just made that point about we could have a future where there are 2 billion human beings and living in harmony with the planet who have amazing technology, and with biotech and quantum computing and AI, and everything is done with robots, and basically everyone has 100% leisure time optionality, and they have all the food they want and all the amazing clothes, and they can travel. It's literally like, I joke about it being a race between Star Trek and Mad Max, right? Like, the future could either be, that's the Star Trek outcome, where everyone's kind of good looking and has amazing apartments on the 100th floor of some building in the Bay Area, or, whatever. And Mad Max, where everyone's, having this very serious physical fights over dwindling water resources and plants and whatever. And I don't know. And I think, there are definitely concerns about the merger of AI and robotics and whether that poses a Terminator-style existential threat to us. I mean, I've read a lot on that, and I don't know. I'm not knowledgeable enough to know how much of a risk that is. And the leading lights of the AI world seem to be quite bifurcated. And there are quite a lot who say, no, we'll always be able to control it. We created it. We'll be able to. It can run on rails, and we can set parameters. I mean, we can control it. And then there are others think that the genie will escape, and we won't. And I don't really feel qualified to talk about that. And similarly, the point I made earlier about this general point that unimpeachably humanity has made an unbelievably incredible progress in the last 2 centuries, right? Technologically and society. And, I think we all should spend more time dwelling on just how awful life was for people in 1800. Like, life expectancy, infant mortality, women dying in childbirth. There was no surgery. There was certainly no sports teams. You can watch the Winter Olympics on TV. You can go on holiday.
You could watch the Gladiators. That was the same distraction.
Yeah, well, that was going back a bit further. I don't think we had. Yeah, we had pugilists. We had boxing or whatever. But the trajectory has been incredible. And it's that point I made about, if you'd said to somebody in a rural community in like Yorkshire or indeed Baltimore or whatever, in the year 1800, 200 years from now, only 0.5% of this population of this country will work in agriculture. Only 0.5%, right? The implication being, on first principles thinking, 89.5% of the population are going to be unemployed, because they couldn't conceive of a way that there would be a model in the future, with a whole load of other jobs where it would be possible for human beings to thrive and flourish in a world where only 0.5% of human beings worked in agriculture, because 90% of people worked in agriculture, and they didn't know what a biotech entrepreneur was, or an airline pilot, or a, insert any, whatever, thousands and thousands, or a movie producer, or, like whatever. And I think when we worry about AI displacing jobs, I think it is analogous to that. I think if every single vehicle in the world is self-driving, and that could eventually extend to like tankers, like I've already seen at various technical conferences, I've seen businesses which have like GPS controlled super tankers, which is probably a good thing, because I think even now today we lose quite a lot of, loads of Filipino sailors get lost at sea every year in massive storms, because it's still pretty dangerous out there, crossing the Pacific or the Atlantic to bring us all our fresh whatever from the other side of the world, or Japanese cars or whatever. And so, if all of those jobs in the maritime industry and in taxi drivers and lorry drivers, if that's hundreds of millions of jobs, I'm guessing, across the world. We can't conceive of a future where those have all gone and that's all done by automation, but there's something better that's replaced it. I don't think many of us can do that intellectually. So I kind of worry in the short term that there's going to be a lot of upheaval and trauma for sure. But I'm hoping in the longer term, there's this lump of labor fallacy. We'll all be doing stuff that we can't even intellectually conceive of right now. And ultimately, really smart AI. So AI, biotech, in the fullness of time, quantum computing, and robotics, crucially, can refashion the periodic table and the natural environment for the benefit of our species, to give us richer, safer, longer lives. Right? I do believe there's a lot of evidence for that. And that's biotech can revolutionize agricultural productivity. It can increase yields. It can actually roll back environmental degradation. Like some of the most exciting biotechnologies, which I don't think are getting enough capital, because all the capital's going into AI at the moment, which is a bit of a shame. But microplastics in our oceans, heavy metals in our soils, loads of big environmental problems can be addressed by biotechnologies, more or less, obviously, and naturally, and actually are in the process already of being addressed. I think that's really exciting. That's going to create a lot of value, and it's going to make the world better. So I think that there's a lot to be excited about, but I do think in the short term, there's quite a lot to, I don't know how we navigate from A to B without there being a world war, but we'll see how we go.
Yeah, we'll see. Do you think AI, though, has become a bubble with the circular investing? Everyone seems to be investing within each other and all of that stuff.
I mean, there's so many charts popping up on online at the moment, just the same story told 100 different ways, of like, this thing was happening, when the .com boom happened. This thing was happening when and look now, and I'm trying to remember. There was one I looked at early this morning. I wish I could remember what it was. It'd be a slightly stronger example, but yeah, I mean, there's that great piece about how the depreciation policies at the moment, as some of the mega, people like Oracle and Nvidia and whatever else, sort of, you can make the case that it looks quite a lot like what Lucent and Nortel were doing. WorldCom, Lucent and WorldCom, and there is potentially a big circular accounting scandal coming, and a revenue recognition scandal, and all of these lofty valuations will end up not being sustained. And I have a fair amount of sympathy for that, without having done a huge deep dive on it, apart from reading a few notes by people I think are much smarter than me. But that, that's potentially a $600 billion fraud that could drop, which is a lot bigger than, I think I'm right in saying, is bigger than Enron, WorldCom, and Lucent. So that's not great.
Yeah. And it's not just the circular investing, them investing in each other's balance sheets, but what I've also heard is the depreciation schedule that they have, because technology is changing so quickly. And we saw in China with the DeepSeek and all of that, they assume, first of all, hardly anyone's really paying for the chat GPTs and all of that because they're not using it correctly. But the assumption in that model is they're going to make so many billions. And the problem is the capex that goes into it. And we're seeing how energy intensive also is. There's just no money to be made. So the lofty valuations.
Exactly. I think that's exactly right. And that case seems to be unanswerable. And it's the sort of crazy hair on fire exponentialists who just think exponential this, exponential that will sort it all out. And, the record of history is that, the internet was an amazing thing that was going to change the world in 1999. But, unless you bought Google, if you bought Lycos or Excite or AOL or any number of other browser, companies, you lost 90% of your money or all of your money. If you bought Google, you had a winner, right? Although with a lot of volatility. The same will obviously happen right now with more volatility. I think because of the point we made about passive earlier, the rubber band this time is stretched. I mean, think about this. When we had the dot-com boom of the late 90s, most of the world wasn't even on email. Like, seriously, only relatively wealthy, highly paid people had email, right? Or at least used email regularly in their lives in 98, 99. It was, I don't know what the penetration rates were, it was pretty small. Today we have 3 billion people on social media. So the madness of crowds and the sort of self-fulfilling strength of all that capital from all over the world flowing into these themes is immeasurably worse, if you like, or more powerful and therefore worse when the tide goes out than it was in the dot-com boom. So, and I think we should all keep a weather eye on that. I'm actually producing a series about that right now. And yeah, there's no question that, because that's what I was going to say. The other pretty intractable thing that's going to prevent this from going the way that people like Sam Altman think it's going to go, or representing it's going to go, because that's his job, right? But is, as I understand it, we don't, nowhere in the world currently has the power generation capacity to even switch on the GPUs that have already been manufactured. Like the way Elon Musk, I was listening to a podcast with Elon Musk the other day saying that, they're going to take delivery, like all these companies are going to take delivery of the next generation of chips, or the whole, raft of GPU supply, and they won't have the power to plug them in and use them. So, how are they going to make the revenues if they can't even? So, the capex cycle really run.
Doesn't Germany have those windmills? Doesn't Germany have those windmills to power them?
They're going to need to do something pretty spicy with nuclear to get anywhere near any of this stuff working. And I don't know. I think the Americans, as I understand it, America's doing quite a lot to reduce the regulatory burden for getting nuclear stuff up in lights, which is probably quite good, because that's the absolute opposite of what Britain's doing.
And I think that's why Bill Gates also got told. He finally switched off his old green agenda thing, and he said, oh no, it's not as bad as we thought it was, because I think he's got a nudge from the Trump administration saying, hey, we're going nuclear, so stop with your rubbish. At least that's what I think. If I was a fly on the wall and I was at one of those dinners, I think he'd say. But this is a funny thing, like the way I've seen AI also, let's say it plays out. Because I was reading an article the other day, and there was an interview following that of an industry insider saying people are really not seeing through the truth of this. I'm on the insights I can see. According to him, in the next 4 years, 90% of white-collar jobs are going to disappear. And he says 4 to 5 years, if not.
I saw that piece. It went super viral.
And if that happens, the one thing, I think our lives will get better. Let's be honest, right? If people know how to use AI properly, like I use some of it, and I can tell you, I don't use it like Google. It has made my life much better, much easier. But the problem is, we live in a debt-based economy where every pleb has to go to work 9 to 5 to pay taxes to the government, and then pay off his mortgage, and then pay GST or whatever it is, and all of that stuff. And if 90% of the population is going to be unemployed, what happens to the debt markets, and what happens to the fiat currency and to the bond markets is what my bigger question is. And that's why I think There's no logical conclusion, but the whole monetary system has to default.
Yeah, well, I mean, this is why it's intellectually super interesting, isn't it? But because the proper sort of futurologists, superabundance lot, the Peter Diamanduses and the Elon Musks and the I think Mark Andreessen you might include in that group. The view is that the productivity gains and the wealth creation, and when I say wealth creation, again, I mean real. I always try to make this point to people who don't understand the difference between wealth and money. Like wealth is crops and metal and houses and granite kitchen surfaces in your kitchen and and fish, and clothes and cotton. Yeah. Money is just a technology that we invented in order to help us swap the wealth around and hopefully vaguely, based on merit, you get more of it and you can access more wealth. That doesn't necessarily, there's a lot of imperfectness around that, but that's broadly what we did. Medium of exchange, store of value, etc., etc. And so
it's a yardstick for measuring,
yeah,
right?
and transferring wealth over time, and I think that's incredibly poorly understood. And the thing I always, I get very angry about the modern monetary theory nonsense. I think that's one of the most damaging ideas out there. That in Britain we have economics professors at British universities who are published MMT advocates, and they're.
Do you want to quickly explain to the audience? I know what it is. Magic money tree is what I call it.
There are ruder three-letter acronyms that you can come up with, which I have, but I mean, it's like I think it's one of the most pernicious and damaging ideas of our age, right? To your point about the fiat explosion, but it's basically the idea that if a country controls its own currency, so if Britain controls the pound sterling and America controls the dollar, it basically doesn't have to worry about global bond markets or financial markets, and it can create as much money as it wants to so that everyone can be wealthy, right? And then the way that it controls that, which prevents inflation, I mean, it's just madness. But they think that because if you create as much money as you want, all other things being equal, that should create inflation. And their argument is no, it doesn't. If you just have really high levels of taxation and tax that money back out of the economy into the government, then you've just created wealth for everyone. And it's just total nonsense, like based on thousands of years of evidence and everywhere. And it's because basically no economy, to my point about real wealth, what is real wealth? An economy like Britain, and sorry to keep going back to Britain, but I guess I'm based here, I'm British, but think of all the things Britain needs that it can't get domestically, like more than ever, right? In terms of agriculture and metal and rare earths and microchips and oil and everything, right? A huge amount of what Britain needs to just survive and live a modern life, we have to procure from the rest of the world. To do that, we have to give them money. And if they're going to give us the goods and services and materials, they're going to have to believe in that money. It's like, so Britain, it doesn't, we can't control the currency. Hey guys, we're just going to invent, we're going to give every British citizen £1 million tomorrow because we can invent as much currency as we like and everyone will be a millionaire. No, they won't, because every other person in the world, like Russians selling us gas, or that's obviously not happening at the moment, but, the Americans selling us energy, commodities or crops or whatever, are just not going to trust our money. They're going to value our money lower. We will not get the real wealth of the real stuff. And so the example I always use here to try and sort of counter this madness with a very simple, intellectually graspable example is, which is analogous to that. But basically, if the extant stock of stuff in the world, i.e. real wealth, crops, metals, everything I've been talking about, is 1, and the extant stock of money is 1 to 1 ratio, right? If overnight you double the stock of money to 2, but no farmers haven't planted any more crops, BMW hasn't made any more BMWs, miners haven't discovered any more lithium or silver or whatever, livestock haven't bred any new livestock. So it's basically the amount of stuff is basically fixed, but you've doubled the amount of money. What happens to price? It doubles, right? And that, that's just a really simple, and obviously there's a time lag. And if you have a little bit of inflation, it incentivizes producers to produce more. And I get all of that. And there's a velocity of money. But broadly, that is a little vignette that illustrates what's happened in the Western world in the last 50 years. is that we've gone.
And you just explained what's happening in the housing market, right? Whether it's the UK or the New Zealand, Australia, there's only so many houses.
It's basically fixed. The stock of money has gone up a lot. House prices has gone up a lot. Doesn't mean houses are worth anymore. It just means money's worth a lot less. And you're right. Nobody understands this. It's unbelievable the percentage. I bought my house for £100,000 and now it's worth £800,000. I've made something. No, you haven't. You've still only got one house. And if you have factually outperformed inflation in everything else, like this, why I wrote this in my books, is like, if houses have gone up 10x in nominal terms and, food has only gone up 3x, then you are 3 times wealthier in terms of food, and it's all about relative value. But, and house prices have gone up in real terms in many markets. They're not right now, though. I mean, London is getting hosed, the real.
I know. I interview guests around the world, and I've been listening to, I thought the American housing market was the best, but I was told Miami and Florida are actually pulling back compared to the other countries. So you just got to think through this, Andrew. The simple thing, the same example you gave when I was interviewed in New Zealand, I just said, okay, if your house has gone up 5 times since 2000, let's say, for example, the dozen eggs you bought cost you $2, and now they cost you 12. Eggs have gone up 6x. They were, I know it's a perishable good, but I'm just giving a stupid example, but still they've gone up 6x compared to your house went up maybe 4 or 5x. But Judy Shelton, when she wrote that book, and she said, we just taxed it out. I wanted to, obviously it's died down since COVID because the Federal Reserve quickly realized when you hand people money directly instead of through the banking system, you do get real inflation, which is the markets. But I wish I could talk to Judy Shelton and say, hey, why don't you just go to Zimbabwe and try this all over again?
Well, no, I know. And they're so obtuse about it as well. They always have an excuse for why it didn't work in Hungary in the 50s, or Weimar Germany in the 20s, or Zimbabwe in the 2009 when we had $100 trillion notes, or Argentina in the 80s, or Brazil in the 80s. Or it's like, what? Or the proximate causes of both the French Revolution and the American Revolution was this. It was basically a massive inflationary money problem. It's a bit more complicated than that, but John Law in France, all of these things are history rhymes, and it's happened time and time again. The Roman debasement of Roman coins, the Greek debased Greek coins. It's happened time and time again. It's just mad. By the way, I think her name's Stephanie Kelton, no?
Yeah. Steph.
What's the deficit myth? That's the name of the book, right?
Yes. And I think she's a big professor at a big university and stuff. And this is the thing, Andrew. People like you and I, we worked in the banking system, and as we've agreed as well, banking finance system, even some of our colleagues didn't understand it. When we saw something isn't right and we went out trying to self-educate, that's when we figured it out. But as I said, you get stupid politicians, and then you get these academics who haven't really worked in the real world, but they just write these papers and they all have all these economic theories, and then they're the ones giving advice, and that's why stupid policy happens in a country. As I said, it's not just that you should be financially literate, but I think you should have run a successful business in the real world for at least 20 or 25 years before you're allowed into politics, because that's the only way you know how everything works in the economy, and commodities are real, and fans don't power your homes. You need electricity and you need gas and all of that, but Germany and Europe is finding out now very quickly. We've touched on these topics. So let's say, for example, again, I know in the UK, because I have a New Zealand, Australian, Canadian audience and clients as well, and it's similar to the UK. Do you think people really understand that they own the assets as compared to owning promises when they have money? I know even the UK has bail-in laws in their banking system, or we talked about the pension funds. What is your view? Do you think people really, again, we know people aren't educated, but do you think they understand that their money might not be available when they want it?
Well, I think one of the things I'd say about it in the UK, at least, we had the Northern Rock crisis, right, in 2009. So, we have had an example of effectively a run on a bank, and the government, in the GFC period. So I think people are a little bit more mindful, but there's still, it's such a battle to fight intellectually in Britain to get people to understand the difference between nominal and real price rises. It's in their property, and to get people like there are so many conventional wisdoms in British. And look, I mean, I know this is true in Australia. I've got loads of friends in Australia, and but it's spent one of my favorite countries in the world for what it's worth. And my grandfather was a Kiwi, so I love that part of the world. It's similar there. Is this like, so a married couple who are both working full time and therefore spending loads on childcare for their kids think that it's a good idea to buy a house and for their interest only mortgage payments in the UK to be 60% of their combined monthly disposable income, and think that that's a model that works because house prices always go up. I mean, like, we have hundreds of thousands, if not low millions, of good, educated, middle-class people in this country of whom that can be said, and the reckoning is going to be brutal. And it's already happening, right? People like you and I have been accused of being Cassandras. Oh, you don't understand, you always make money on property. The stock market's a casino. Gold's for idiots. It doesn't produce anything. Warren Buffett says it's rubbish. Fighting this fight and trying to educate people with the evidence for 20 years, actually. And so it's 12 years since my book was published. I started blogging a few years before that. It's really depressing, the extent to which the majority of people still can't engage with and are not willing to hear this stuff. And the tragedy is just how damaging that is to their lives. And the fact that we don't learn, one of the big battles I fight is don't be 100% in equities if you're 60. Like, you need to understand, if you're 30 and you're 100% in equities and there's a 50% correction, you might have $10,000 and now you've got $5,000 is slightly annoying. If you're 60 and you've spent a lifetime working really hard and now you have $1 million in your, 401k or pay or whatever, and there's a 50% correction, you have $500,000 and you're 60 and you're just on the cusp of retirement, there's a completely different problem. And the number of 60-somethings approaching retirement who got hosed to the tune of 50% in 2007, 8, 9, or in 87, or in 99, 2000. And people don't learn the lesson of history, and people are still like, the amount of stuff I get on my social stuff saying, all you need to do is own the S&P 500. You'd be an idiot to do anything other than owning the S&P 500. The S&P 500 has done 10% a year for a century, which is the point I make a lot, but with caveats, and 14% a year for the last 15 years, or whatever the stats are. All you need to do is own the S&P. Okay, mate, but you're not catering to sequence risk. And the fact that if you are unlucky enough to just be on the verge of retirement, the next time there's a 50% pullback, an AI crash that we were talking about a minute ago, that's a terrible life outcome that's completely avoidable if you get your mix of assets right. But yeah, anyway, so I'm really enjoying this chat.
No, let's go there because thank you. I've actually heard you say something based on age and stuff as well. So firstly, if you could, a couple of things, if you could explain that, of your piece of how you go about explaining that. And let's say if we do believe what we've just talked about, that in the next few years, there might be a reckoning coming because of the end of this 3-4, I believe in a fourth turning, right? I don't know if you've read that book at all.
I have it. I haven't read it yet. I'm kind of broadly familiar with what it says, but
yeah, I get them in chunks, and then I get through when I have time to get through a few. So I'm just like you in that context as well. I barely get free time nowadays. But let's say we're in a fourth turning and all these cycles have repeated. We know what's going to happen. Like people like you and I know what's going to happen and how this is going to play out.
We don't know when. We have a good idea of what.
Yeah, exactly. And again, not to the point, but so based on that, firstly, what's your basic, the concept that you've talked about previously, I've heard you speak about. And the second thing is, if we were going into this end game, how would you position or tell someone, there's not personal financial advice, but the investment thesis, and how do you position for that?
Sure. So look, I've written about and talk about a lot an idea that's not mine, and it's very well known, and lots of your audience will know, which is this idea of 100 minus your age, which is it modern portfolio theory, Markowitz and co, who won the Nobel Prize for that, and they came up in the 60s, which was the basic the simplest exposition of that was the 60-40 portfolio. Like if you're 60% equities, 40% bonds, your bonds, they're negatively correlated through periods of equity dislocation. You get, and actually that in the 60s, 70s, 80s, 90s, that delivered like 9.3% annualized return. like a plain vanilla US 60-40 portfolio for a US citizen, which is a pretty good return with a lower risk of, lower volatility and lower max drawdown than just owning the stock market. So that was good. The way so the other thought process, which actually John Bogle, who founded Vanguard, is probably the guy who popularized this, was 100 minus your age, which is that you should be, 100 minus your age is your percentage in equities and the rest is in bonds, rather than 60-40. So you tweak it probably every 5 or 10 years. So, if you're 50, you're 50 equities, 50 bonds. If you're 30, you're 70 equities, 30 bonds. And if you're 70, you're 30 equities and 70 bonds. Again, that just using the original version of that 100 minus your age is bonds and equities. And the main reason for that is because when smart financial advisors or economists came up with these ideas, the only products, the range of products available, the ETF market didn't exist, right? So you're just about to be able to get a sort of diversified equity mutual fund for the equities piece, and then some US treasuries or CAT or whatever, from a financial advisor in like 1955 or when people were talking about this stuff. So move on to today, and the way I've updated it is twofold. So rather than equities and bonds, I talk about aggressive and defensive. So there are a number of different aggressive assets, and there are a number of different defensive assets that you can use for the two silos. And arguably more important still is that now 100 minus your age might not be the right calculation. And the reason for that is because life expectancy, when they came up with this idea, was like people basically died in their late 60s or early 70s. And now people die in their early 80s or late 80s or 90s, right? So if life expectancy is 20 or 30 years longer, as it is and probably will continue to be, then and crucially, more people are white collar information workers than in the past. So like, I've got a board director who's in his late 70s. Warren Buffett's only just retired at 95 or whatever. If you're working longer and still being paid, then 100 minus your age is the wrong ratio, because you can afford to be risk on for much longer because you're not going to retire until you're 75, right? So the way you cater to those things is you make it maybe 120 minus your age or 110 minus your age. So, if you're 50, you're actually still 70% equities, perhaps, right? To be clear, the other addendum to this is all about a thought process that involves investing dollar cost averaging every month from the minute you can start doing that in your hopefully 20s until the minute you have a lot of money and you can live on your capital, not on your labor. That's the big picture goal. So this isn't a rule of thumb that, you wake up one day on your 50th birthday and go, oh, I've never thought about finance. Right, I'm going to put 50% in equities, 50% in bonds. I mean, you can kind of think that way, but the better thing would be to have been, bigger in equities all the way through your 20s and 30s, which is why I've just written a book for under 30s to try and, because capturing young people is like the most important thing for their future life success. So that's the way I think about it. And then, I guess I've been quite lucky because my favorite defensive asset in that allocation has actually been precious metals, right? So, what was it? In early December, gold had actually outperformed the S&P for 30 years. Right? And it always moves around a lot depending on what the S&P is doing and what gold's doing. But so I could anybody who read my book 13 years ago and went sort of 60% S&P 500 or MSCI World Equities and 40% gold, has had the defensive bit shot the lights out and the aggressive bit shot the lights out, which is a very nice outcome and a much better outcome than using bonds, particularly in a zero interest rate policy world where the yields on fixed income have been rubbish. Because that's the other point, is that, for much of the last few decades, this was a great idea with bonds and equities because bonds were yielding 7% or 8%. And when bonds are yielding 1 or 2%, or, why has the 60-40 portfolio stopped working? Because everybody has inflation expectations. And for a while there, a lot of bond funds and bonds plummeted, and, the capital value plummeted, right? Look at the
2022 event.
Yeah, exactly. When interest rates start going back up, look at the long duration bonds the Austrian 100-year govies down like, it fell like 80% or something, whatever. But
in the UK also, you guys had a guilt problem, right? Which we've discussed as well, because that's the whole thing. Governments issued debt, Central banks tried to buy them, low interest rates and all of that, and suddenly central banks had to start increasing interest rates to fight inflation. The bond is underwater now suddenly.
Although in terms of new issuance, what I think you and I would both agree is going to happen is, I mean, how long is it going to be before we start getting some serious failed gilt auctions? Like the British government say, we need to raise 50, to your point about them talking to the IMF, right? So they're just going to go back to the old QE trick of just inventing money, and then that's massively inflationary and debases the currency. But to quote John Maynard Keynes, not one man in a million understands this stuff, so they get away with it. Except everyone's like, why do eggs cost, like to your point? I buy 10 eggs. They're quite posh, kind of organic, expensive eggs, but 10 eggs in a UK supermarket today is £6.50.
It's crazy.
It is.
It's crazy.
And a pint of beer in London is now, £8.
Yeah, and people don't understand the eggs haven't improved that much, or the beer is still the same beer and the same barley, and the wheat that makes the barley is the same wheat also, but it is the dollar or the pound that is depreciating. So your yardstick is the problem and not the actual stuff. But there was something which you were talking out there as well. I believe, unless it's very short duration bonds, just for liquidity purposes, I think they're kind of best to stay away from. And as you said, you just talking about a model portfolio and also what worked in the past, right? You did touch on gold and silver. Do you want to talk us a little bit more? Because I've heard you mention that in your book a long time back, you had already mentioned approximate prices. Now we know the prices have already gone up. Yes, there's been a quick pullback just recently. Where do you think, again, it's not like a prediction kind of thing, but a multiple of, because again, the pound could depreciate by 60%, which gives it a rocket under its price again. But where do you think approximately does it sit? And do you count these in ratios compared to pounds, or how do you...
So I literally, my last video I just posted on a YouTube channel like a week and a half ago was called Gold at $5,000, silver at $75. What next, or what now, or whatever. So they're literally just, and look, I don't do kind of prescriptive ratio based price targets. I mean, because there's, you could kind of go, well, what's the ratio of house prices to, a British house price to an ounce of gold? What's the ratio of oil to gold? What's the ratio of the S&P 500 to gold? What's the, and those analyses are sort of intellectually quite interesting. And they will broadly say, well, at the moment, I think if you do a ratio of kind of extant stock of, government govies, like developed world govies, as against how much extant physical silver and physical gold there is in the world, both of them still have masses of upside priced in those fiat currencies, right? Because that's just a ratio. Doesn't mean that's what's going to happen. I mean, partly because of the, nefarious, one area where I think there is a lot of nefarious activity is in the spoofing of the precious metals market by, large American investment
Do
banks.
you think that is what happened towards the end of January, 29th or 28th of Jan, when the silver price dropped?
Well, I'm not, all I'll say is it's worth reading. There's a guy called James Rickards, who's written a lot of books, and yeah, you'll know him. And he wrote a book called The New Case for Gold, which is, and it's just like, it's got the really like, look, these are all the signs that this market's manipulated in the futures market, and why is that, and how, and I think there's a certain amount of credibility there. I love that. I think Tim Price, actually, the guy you've interviewed a few times, made the point. He said there's some joke about, or like it's an Alex cartoon about the Fort Knox. Like there's no gold in Fort Knox, Mr. President. Double the guard. It's like,
yeah, it's all a confidence game, right?
Yeah. Well, I wonder. I mean, that thing. I think the Germans asked for their gold back like a few years ago, and it's been coming back in dribs and drabs. And
oh no, they got the first half. Germany got the first half, which they asked quite a few years back. They asked for the rest, and now it's taking the Federal Reserve ages to just kind of ship it back and all that kind of stuff, which tells you where is the gold. And there was something earlier also which you covered in Dominic Frisby's book. I follow Alistair McLeod as well, who says China could have about close to 30 or 35,000 ounces or a little bit more because they don't hold it on the central bank It's with the PLA and all of that kind of stuff as well.
That's what that analysis is in Dominic's book, and it's incredible. Like,
Yeah. I haven't read the book, but I've heard Alistair McLeod talk about that, and about the crash on the 28. I've actually written an article on LinkedIn, a quick one about this, where I talk about the little crash that happened in gold and silver, because there was a lot of coincidences that happened simultaneously, right? HSBC systems were down, the Asian markets were closed, COMEX increased margin requirements. All of these things happened simultaneously. The prices dropped, and then suddenly JP Morgan got to liquidate all of the short positions.
It's like there's nothing to see here. Nothing to see here. No, that was all just completely a coincidence, and all that happened on the same day. I know, but by the way, we need to be careful. I'm gonna go out for dinner in London in a few weeks' time. I find myself like just getting a to the back of my head from it.
No. I think everyone's openly talking about this, because I think what they're letting it happen now, because I think nowadays they're letting people talk a little bit more about this, because there has to be some kind of explanation. But the common sense thing is, as you said, when Trump and Elon Musk were saying, let's go to Fort Knox, and suddenly they just dropped the conversation, and you'll see something happening here. Or right now there was Venezuela, and suddenly there was Epstein files being released. If the Epstein file is being released, people are saying there's actually something else going on there. They're passing some legislation behind the scenes to distract you. Now, how true that is, if this conversation resonates, it usually means you're already sensing that the world of money is changing faster than the advice most people are getting. These conversations are really about helping people think more clearly. Not predictions, not hype, just understanding how the system actually works. So this episode helped connect a few dots for you. Liking the video, subscribing to the channel, or sharing it helps these ideas reach others who are asking the same questions quietly. That's how we grow together, one thoughtful conversation at a time. Thank you.
Well, the other thing about the Epstein files, what I find incredible about that, right, is that there's this huge fanfare, massive media circus all over the world. It's, it's Prince Andrew in the UK and Jeremy Mandelson, Peter Mandelson, and and all this stuff going on, and it's like, and millions of emails being released, right? The press have got hold of all this information, and they're combing through it, and there's all these, there's a new news story every day, all about the admittedly awful kind of sex crimes of the guy and the leaders and all this stuff. But there seems to be nothing at all, like a thundering, deafening silence about who was he and who funded him, and like, was he a Mossad agent or a Russian agent, an FSB agent or a CIA? I think he was all of the above. And it's just like, but it's like there's some really missing link there, that all the focus is on, well, what did Prince Andrew do? And it's like, well, hang on, how did this guy end up? Like, he basically was demonstrably not really a bona fide like private banker or anything, and then he's inveigled his way into really senior level of all sorts of governments, and has all this compromise, and is just unbelievably wealthy. And it's clear that his lifestyle massively exceeded all the estimates of his wealth. It's like, you can't, even if you're worth $600 million.
There was a bit of leak in there saying in some of the emails, he had admitted it was the Rothschilds or the Rockefellers that were funding him. So that's been released. And to be quite honest, even the CIA and the Mossad thing is quite out in the open now, because it was a honeypot operation to pretty much just blackmail politicians and all. So nothing we're saying is something that hasn't been discussed out in the open on all channels by everyone. But what are your views on, because I knew Bitcoin, again, when people say Bitcoin, so my view is, okay, if you want to invest a little bit, maybe like a 1% of your portfolio, just have some fun for the upside. But then some people saying Bitcoin is going to save us and all of that stuff as the exit ramp. But then there was a Bitcoin thing in there as well, saying he maybe have funded it. He might have helped fund 60%. What are your views on Bitcoin?
I've seen that sort of conspiracy stuff come out. Satoshi was something to do with Epstein, or there's all the same cabal. I don't know, but I think my view on Bitcoin has always been exactly like you there, that it's a, when I was talking about aggressive versus defensive, I mean, it would go in a minority position in your aggressive bit, right? And what really I find just eye-watering is the lack of regulatory oversight of all the market participants in crypto for the last many years. The British FCA, yes, it's like it's outside of the perimeter. It's not a regulated asset. It's like, oh my God, people up and down the country are losing their life savings. Husbands and wives are divorcing because the husband invested, all their took on masses of credit card debt to buy Bitcoin because some idiot on social media said, "Oh, Bitcoin's definitely going to $1 million next year." Like I've seen this firsthand. I've been in Facebook groups where I've seen people like suicidally depressed because they've lost their life savings, right? And it's like, no matter how much you drunk the Kool-Aid about whether it's a kind of digital gold and whether it disintermediates the fiat currency system and all the good, I get all those intellectual arguments, right? It's an incredibly volatile asset. And the record of history is always that most people lose money in volatile assets because that's what happens because of fear and greed and human emotion. And we're all crap investors at a fundamental level, right? So no matter how good, and I made this point, that like Bitcoin enthusiasts will go, well, it's the best performing asset in the world. Let's just say start of that. It's gone from $1,000 to $100,000 for the sake of argument, right? You could have made, or even $100 to $100,000, right? You could have made 10,000 times the money. Is that the right math? Whatever. And what that does,
that's selective data picking for their argument.
Yeah, correct. But what that doesn't tell you is the actual reality is that the vast majority of normal people who have participated in that market during that point-to-point price movement has lost money. The Bank of International Settlements did a piece about this, and they estimated between 70 and 80% of retail investors have lost money in Bitcoin. And that number will be higher now because it's obviously gone from 120 whatever back to 63 or whatever, 65 or whatever it is today. So it's like, it makes me mad that I think it's a high level of complete muppetry when people who've got no previous, they don't know what a risk-adjusted return is. They've got no deep experience of economic history or fiat currency or gold or any of the wider, and they woke up and smelt the Kool-Aid on Bitcoin because they read one book and watched 5 YouTube videos. And now they're giving out financial advice about Bitcoin and going, oh, you're an idiot. It's the best performing asset in the world. You're a complete idiot. Not so. It's like, dude, it's really not the best performing asset in the world for most people who've been involved in the market, right? The only people who've really, really won in it are a bunch of whales and some very, very lucky, a lucky minority of retail investors because volatile assets, because of the way our brains work, we are all psycho-emotionally poor at investing. Most people in any volatile, they buy it at 20,000, it goes to 40,000, they sell it. I've doubled my money. Then it goes to 100,000. You're like, oh shit. Or, I'll get in at 90, they buy it at 90,000, then it goes back down to whatever, and they sell it in panic and lose 50%. That's the reality of dealing in any very volatile asset. And that's a story that doesn't get enough airtime. So, and also I think the point I made earlier about the madness of crowds has never been stronger than when you have 2.2 billion people on Meta, right? Like a hot .com stock in 1999, the addressable audience of like a few tens of thousands of people in like online, e-trade accounts on going, oh, here's a .com stock that could goose that stock to a certain level is a minuscule fraction of the madness of crowds' impact on crypto in the last few years, right? And so, I think it may have merit in the long term. It may be worth $1 million. I don't know, but I certainly don't think it's something that, sadly, an awful lot of people in the West have given up on equities and precious metals and, proper, real, because that's the other point. Sorry, I'm crapping on, but I've just spent 10 years trying to raise money for British businesses, largely, that are making an amazing medical device or have a chance of, delivering a transformational treatment for a cancer that we're, making a huge difference to patient outcomes. There is no money out there. It is almost impossible to raise money for companies to do biotech in the UK. It's a disaster, right? 14 British biotech companies have floated on the stock market since 2018. 13 of them didn't do it in London, and they all had a pretty rough time doing it. Where in the Nasdaq they're all underwater, and because it's so expensive, and they're on a different time zone and whatever. Meanwhile, $3 trillion has gone into completely useless projects that have no real world utility or wealth creation at all. That's a massive, massive misallocation of human capital. Like, whether or not you made money in Bitcoin or altcoins, all the money that's been hoovered into like 60,000 or whatever it is, ICOs of altcoins, the significant majority of those have delivered nothing for our species. Nothing. They've made a few people rich who are lucky enough to stag it, get in, get out, pump and dump. They're now sitting on yachts in Thailand or whatever. But has it cured cancer? Has it built a building? Has it opened a factory? No, it doesn't done any of those things. It's been a massive, egregious, eye-watering misallocation of our capital in terms of what could have delivered more for mankind. And that's a really important point to make as well, in my view.
No, Andrew, I can see the passion, man. And that's the thing. Like, the unfortunate thing I've come to realize in our world is a few years back, well, when I say a few years back, about 8 or 10 years back after the global financial crisis, when I understood the system, I was like you. I was trying to shout off the rooftop saying, look, this is what is happening and this is the true opportunity. And then the more I did that, I just realized the world is not ready. In the sense, most people rather bury their heads in the sand than actually understand the truth, because it doesn't benefit them. And as you said, especially with today's world, with all of this artificial intelligence and your TikToks and everyone's attention span. The other day, I think it's gone now. People's attention spans have gone from, I think it was 6 or 7 seconds down to about 3.5 or 4 seconds now, which just tells you the population, well, the people around us. And as a matter of principle, that's why I did this podcast, which is Connecting the Dots, which is a long format, because if you don't have an attention span, I don't want you in my audience. This is for real people who want to understand how it could impact their life as well. But the other thing also I said is, when I got interviewed, I was just said 3 weeks back, people aren't going to wake up right yet. But we're starting to put things in their mind right now is, why doesn't the money go to life sciences instead of a meme coin? Like, what was it, like a Dogecoin or something like that, or some ridiculous stuff? But they won't. But in about 4 or 5 years, when the system collapses on them and they get slapped in the face, is when most people wake up and go, can we do better with this money? Especially, first of all, if you think about it, governments take on debt to go to war. Is that productive? Really? No. But we are paying taxes so they can continue doing that. So the whole point is financial education.
In the debate about, for example, wealth taxes and taxing the rich more, right? And I've got loads of thoughts on that. It's a very nuanced and complicated thing. But one of the broad points to make is, like, governments, why do you want to give government more money? I want to give government way less money, because they spend it largely incredibly badly. Everything they do, or an awful lot of what they do incredibly ineffectively. And the evidence for that is legion, right? And left wingers will come back and go, well, without them, we wouldn't have airlines or mobile phones. So yeah, I know, but that's like, for sure, that government all over the world, and there was a certain period in the States in like the 50s and 60s in particular, where there was some really good quality science post the war, and all the German scientists that have gone and all that good stuff. And it certainly has had an influence on the early trajectory of a lot of really important technologies. But the real delta that's created the trillions of dollars of real wealth, and the fact that we've manufactured 20 billion smartphones, 99.999% of that reality and that value creation has come from the private sector, and endless innovation by brilliant people working at places like Apple or Xiaomi or Samsung or whatever, right? Not from a government scientist who happened to come up with a touchscreen technology at DARPA in the early 90s or whatever. It's the contribution of the public sector to that across the piece. I mean, like, I've spent years working with small companies, like Mittelstand German companies with machine tool businesses, laser businesses, whatever. It's extraordinary what smart people in corporate entities can do, like, to deliver incredible technologies and incremental, improvements in tech and cost down and price down. That's what's created loads of wealth for our species in the last 200 years. Governments generally are very, very bad at that. And to your point, how much does an F-35 cost? How much does a stealth bomber cost? I was at a conference where there was a defense analyst giving an amazing presentation. Listen to this. So, the newest class of destroyer in the U.S. Navy, right? I forget what it's called. The whatever destroyer. when it fires off all of its ordnance, do you know how much it costs to refill the ordnance, to like reload all the, big guns and armaments and missiles and stuff? For one destroyer, how much does it cost each time?
I think could be about 130 to 300 million, somewhere in between.
500 million US dollars. And like off the top of my head, like America's got like 100 and something of these ships, right? So basically they've got 100 plus of these ships going around the world doing war games, and then they just roll out another $500 million worth of armaments. Like, I mean, what, I have a problem with the income inequality caused by the distortions to capitalism caused by passive investing. This is a huge fight of mine at the moment. I'm doing loads of stuff on. As I said, Elon Musk would not be notionally worth $800 billion if it weren't for the fact that Tesla's on 400 times earnings and SpaceX is on, these are just, any student of company valuation knows that's, what's the earnings yield if the P is 400x? Like, the implied return you're going to make is nothing, right? And the PEG ratio, like, they're never going to grow. It will never grow into that valuation. The only reason that I'll be wrong is because yet more tidal wave of passive capital will come in and keep on that valuation. But that, if that ever stops, which I think it will, that will plummet, and all of that wealth inequality will be addressed. But in the meantime, even if these people are egregiously inappropriately wealthy because of those market imperfections, wrought largely by government intervention in stock markets, by the way, as we were talking about earlier, then that is something that's not great. But I still don't want to give government. I want government to become immeasurably more efficient and do much less, because I think that demonstrably gives much better societies, much better.
Yeah, exactly. I totally agree, right? I think they should just defend our borders and maybe some basic, maybe strategically important infrastructure projects, and like to start signing off. I don't think they should actually develop it because they're absolutely useless. They start off at a bid of maybe 300 million, and by the time it's finished, it goes to 700 million or something along those. I'm just giving an example, like it happens in California right now as well. Everything's priced at a certain amount.
That's the regulatory capture piece as well, the Bill Gurley thing. It's like the guy who used to be in this lobbying firm is now on the board, and then has mates at the Pentagon, and then, oh,
Ahmed, if you think that is bad, you should come to India. Like 80% of the cost goes to the politicians, and it's in Swiss bank accounts and all of that stuff, right? Nothing in India gets done properly. In fact, bridges, after they're made, I think in about 2 years' time, they start falling apart. And the talk of the town, when I talk to some of my Indian friends, and I'm like, why does this happen like everywhere? Like nothing is built to last. And he's like, how do you think the guy who built the bridge is going to get money again if he builds a bridge that's going to last for 100 years? He's not. So he and the politician are in cahoots, and I don't care, I say this openly, they are in cahoots, and they build it only to last 2 or 3 years, or there's little potholes here and there, and then they get a contract to build it again. But that's your taxpayer money, which is just inefficiently wasted on stuff so politicians can get rich. It's crony capitalism, as we said, right?
That is increased. So Britain used to be much better at that, like 100 years ago, 60 years ago, like, sort of the way Britain used to comport itself in the world, but although maybe because it basically went and stole all the wealth from the rest of the world from having a massive empire, right? So there is that. But so maybe I had the luxury of behaving like a very, very good actor with respect to things like that. But I think corruption was structurally very low in Britain. Britain today, both this woman, I don't know if you know about this woman, Michelle Mone, where basically Boris Johnson and all that lot. So she was a lady. I don't know if they've stripped her of her title. I hope they have. But basically, in the COVID crisis, they made like 150 million pounds, whatever, out of sourcing crap PPE from China, which ended up all being incinerated, and they never gave the money back. And it was basically mates of whatever. It's absolutely eye-watering. And the Labour politicians right now, they're getting caught time and time and time again. But there's loads more corruption in Britain now. There are loads more potholes, and if I go and drive my car around the corner, this is increasingly looking like a developing world economy because of all this stuff. But what I was going to say is, what always is fascinating me is, why is Switzerland much better at this? Like, why is Paraguay really bad? India's pretty bad. Like, why are there certain places in the world where people just are less corrupt? Or maybe Switzerland's a bad example, but I think
No, Switzerland's a good example because they have direct democracy, right? They get to at least vote on what goes in and stuff instead of politics, which is
that's
corrupt.
actually a really good answer. Yeah, exactly. It's the feeling enfranchised and involved with what's going on in your local community. You're not gonna, the more local it is, you're not going to spend $100 million on whatever thing happens in your local community, because then you're all poorer. So you focus on delivery and cost. Whereas in a,
what's important, and you have a say in the direction of your country as well. Again, my view on Switzerland is it's done a few wrong things in the last few years with the NATO and what they're doing with the SWIFT system and all of that. They are being corrupted. But again, I think at the other end of this is where, and what I believe is in the next 6 to 7 years, all trust in governments is about to collapse. COVID kind of started the process very quickly, and people are waking up now. And now people are seeing this stuff with the inflation, and politics is just going crazy, and the wars and all of that. People will wake up over the next few years, especially when the digital ID and the CBDC and all of that gets pushed on them. And I think at the other end, we have the opportunity to redesign politics. As you said, instead of 660 MPs, maybe have 100 intelligent people who have run successful businesses, who know how the world actually operates, whether it's a monetary system or...
But I do worry that, you know, one of the thoughts that comes to me quite a lot at the moment, which is very depressing, is this idea that people get the politicians they deserve. And I feel like, you know, Britain is the worst it's ever been. And I fear that a big reason for that is because our electorate, to your point about short form, the only way you're ever going to understand this stuff is to read, look at my, like, you have to read books. You have to read 300, 400, 500-page books if you want to understand deeply about anything, in my opinion. Nutrition, healthcare, health and fitness, like history, like, and finance and capital markets and monetary systems and gold and all of the stuff, right? The only way you're ever going to properly understand this, or which tax policies deliver better outcomes, right? And in a world where nobody reads books anymore, you know, 80% plus of the electorate have opinions about things that are just wrong, like properly wrong. And as I said earlier, that they don't have the historical context. They don't have the technical understanding of how, you know, the Cantillon effect creates inflation, how government bond markets are related, why that's what, you know, all this stuff we've been talking about. Comfortably 80% or more of the population totally don't understand this. And worse than that, they're 180 degrees wrong. They have incredibly simplistic opinions of things. If you do this thing, it will make things better. And it won't. It will make it worse based on people who've actually studied the evidence in dozens of countries over centuries, right? And my fear is that, as you know, it's like, as happens throughout history. Look at Cambodia under Pol Pot, right? You know, like, look at this is my fear, is that you get a really unhappy population, and actually intellectuals and smart people and people who have read hundreds of books and are the first to get the guillotine and the revolution. You know, they're like, that's what's happened time and time again throughout history. You know, book burning, Fahrenheit 458 or whatever that, you know. So I genuinely worry a bit about that in the next few years.
I think there's a revolution coming, and that's what I'm saying, because the powers that be aren't going to give up their power voluntarily. That is why I think the whole digital, like, nothing makes sense, right? Your prime minister, first of all, as you said, how did he get elected? I don't even think they get elected. They only win at 30% or something, and then they kind of sleep in bed with other parties just to get into power and then run it over.
Well, what they also do is so this government has not adhered to anything in its what's mandate, like what's it called? What's the document they write? Manifesto. So, like, they've literally just said, we will not do this, we will not do that, we will not do that, we will do this. Totally 180 degrees opposite, totally lied. And it's like, you know, how does democracy work when you go into an election where they say, well, we won't do these things already, and then they do these things? Like, that's just not democracy. Then you vote. You can't trust.
It's not. The facade's coming off, mate. The whole facade of democracy is coming off. And I think that is why, at least, people are starting to see through that the facade is coming off, and people are like, why are we voting for these people if they don't do anything that we want them to do?
The thing I worry, but I worry that the problem is because the electorate are so ignorant of history and politics and economics and how this works. The replacement will be worse. It's like Mamdani. We're going to go for socialism, communism, and the world will be worse, more insecure, much poorer, much more violent, like it has been every other time that's happened.
No, I agree. It gets a little bit worse before it gets better. As I just said, it has to get worse. Then people would tear down the system. As you said, people are illiterate. But let me be honest, I can tell you, the average person is not as stupid as the politicians think. Yes, during COVID, a lot of people got fooled. But now as they see some of their family members suffering, or they're reading on some stuff, and as much more of the news is coming out or the data is coming out, they're learning about these things. So I think, in fact, even when we talk about something like gold and silver, right, understanding a little bit of the Indian psyche, it's the Indian mothers and the grandmothers who first, when they have savings, are the ones who run out and buy gold, because they know. You don't need the government to tell you there's inflation. They know, because when they're buying pulses or they're buying rice, and they're like, rice used to cost me 100 rupees, and now it's costing me 140, and next month it is 160, and they're like, something's not right. If they got savings, they buy gold. So the average person is not as stupid as the politicians think they are. There's a boiling point, as we say, there's a tipping point, and I think people are getting closer. Not yet. People are still getting closer over the next 2 or 3 years.
I hope so, because what I fear is, like, okay, in 1917, right, the Russian Revolution, that country and the whole of the rest of the Soviet Union, then Poland and Romania and the Czech Republic and what used to be called Yugoslavia and the whole of that side of Kazakhstan, a huge chunk of the world's population lived in abject misery for the best part of a century, right? And when I look around the world now, we have a whole cohort of young people who have not learned these lessons. We have the mayor of New York is basically a communist. They've been elected in by young people. No, who've been elected in by young people who have not learned. We have to educate people just how unbelievably bad life was on that side of the Iron Curtain from 1917 till basically the fall of the Berlin Wall. But then obviously there's been, it's not perfectly, the kleptocracy of Russia and Putin and the oligarchs and, Russia, the fall of the Berlin Wall, a bunch of very violent, very aggressive people managed to basically take all of the country's wealth. And they're the ones with the huge super yachts in the Mediterranean and the, $100 million apartments in Hyde Park in London and everything. So that since the communist revolution in 1917 to today, the outcome for hundreds of millions of people in that part of the world has been really, really bad. Like grindingly poor, starvation, violence, people in East Germany reporting on their uncles or their brothers or even their parents to, like horrendous, a horrible, horrible society. And we have such an ignorant population that now people all over the world think that's a good idea and they won't vote for it again. We have to fight that so hard, because that's, I've got 2 children. I don't want them living in a communist world, because it's awful. And then the idea that, we can do it better this time. No, you can't. It's like,
no, it failed everywhere. It's been tried. And that is why, obviously, even Argentina is proving an example that when you turn the other way and you do it properly, you can turn a country around. But I also believe in human nature, as you said, when we talk about investing as well, we said emotional, right? Human beings are emotional beings, and that is why a lot of decisions are fear-driven or stuff like that. And that is why what's happening, I believe, whether it's nefarious or not, human beings don't notice slow creep, right? But they notice sudden change. All the frog kind of analogy. I think COVID was a little bit off that. They kind of shook people awake. And I think now, like, we take a long time to gain confidence. And in Western democracies, what I believe is we have a lot of confidence that now our governments are right, our governments are not. They don't take bribes and all of that stuff. And it's a democracy and they'll do it in our best interest. But we lose confidence very quickly. Humanity, a lot of time to gain confidence and trust in something. But when you lose it, you finally lose it. And I think that's the awakening that's happening in humanity, whether you show it from a spiritual point of view
that's
or
the
not.
Warren Buffett quote. It takes 30 years to build a reputation and 5 minutes to lose one, if you think about it that way. Yeah.
And then on Warren Buffett, and then you see who is swimming naked, right? So we'll see who is doing what and all of that. Hey, you've been pretty gracious with your time, Andrew, so I don't want to hold you back for too long. So we'll finish off. We'll possibly invite you back on, because me and you could talk about theory and all of these things
How is it like? By the way, sorry, I love long form stuff. I always do feel a bit sorry for anyone who's gonna sit through. I think we should do next time. We should do 2 1-hour ones, not a 2.5 hour one.
Okay, no worries. We'll bring you on and we'll do that, and we'll have specific topics so then the audience can then click on that. But just to finish this off, every time the first time a guest comes on, just so the audience gets to know you a little bit on a personal basis as well. Quick one, what books do you recommend to your friends most often? Besides your own books?
Yeah. Oh god, I should have thought more about. I mean, so many. So at the moment, I'm recommending Dominic Frisby's book about gold. Last year, one of my favorite ones was David McWilliams wrote a book called Money: A Story of Humanity, which is super good if you care about. And actually, that's a new. There's a guy called Niall Ferguson, who's a Harvard economic historian, who wrote a book called The Ascent of Money like 10 years ago, which is also really good. All of this stuff is great because it's like the Romans and the Greeks and precious metals, and it really goes back to the sort of first principles and basics of history and how this stuff all occurred. More kind of not on the subject of finance or capital markets or money, just sort of personal development, uplifting stuff. I really love Tim Ferriss. I don't know if you've ever read any of it, like the 4-Hour Work Week, the 4-Hour Body. I think he's done really good work. Like the 4-Hour Body, people who are struggling with their weight or struggling with energy or struggling with their nutrition, or that's just a brilliant 80-20 kind of really smart off the wall dissection. I've always loved his stuff. I mean, so yeah, you can see behind me that, there's a lot. I love books are like some of pretty much my favorite things. So, who wrote The Big Short? Michael Lewis. Everything Michael Lewis has ever written, everything that I don't know, Seth Godin. Anyway, I'll go down a rabbit hole and give you 100 recommendations.
Yeah, don't do that because we need to put links in there as well. But when you said about The Big Short, when I started digging, obviously they made a movie and all of that on The Big Short, but there was a book out there which not a lot of people know about. It's a very small book. There was a guy who made the second most amount of money after Michael Burry, and it's from his perspective, and he was inside the hedge funds and all of that. And that was a brilliant book. It's sitting in New Zealand on my.
Was that not John Paulson?
No, what is the name of the book?
No, but I'm just thinking.
No, John Paulson was the guy who was on the Treasury and all of that. He was a Goldman Sachs guy.
Oh no, who am I thinking of then? There's a head. The guy
this is a different book. Nobody knows his name, and this is the thing. It's such a quiet book, and it was recommended by someone in Greece when the banking collapses had happened, and I read that book and I was like, okay. So the insiders obviously know.
Put it in the show notes. So I can put it in the show notes for this interview so I can see it as well.
Sure. Well, I'm in a different country right now, so if I remember the book, I will. But it's sitting on my shelf in New Zealand. But it was one of those brilliant books. On to the next one. What do you have a motto in life at all?
It always was an extraordinary life. Like for years as a kid, I just wanted to make sure that I lived an extraordinary life. So travel experiences, just doing mad, like publishing a book, being an author, whatever. I've succeeded with that mostly. I've been to, I don't know, nearly 100 countries. I worked out, I've been out to a nightclub in like 90 cities of the world once or something like that. It's like, so I definitely did a lot of good stuff along the way in that endeavor. And then it all came to a bit of a grinding halt when I had my daughter 8 years ago. And you learn very quickly I've got an 8-year-old daughter and a 6-year-old son. And your life is still extraordinary for different reasons. But the whole running around the world, doing, going to cool places and traveling, whatever, is it takes a slightly different thing. But I think that's probably still a motto, like an extraordinary life.
Yeah, fair enough. Since you've now told me you've traveled to about 90 cities, could you tell us a favorite, maybe a funny story on one of your travels?
Oh God, I'm not sure any of them have.
Just one funny.
Oh, you put me on the spot. Well, like, that's a really difficult thing. Tell me a funny story. I mean, when I was this has just popped into my head. When I was an intern on Capitol Hill in the U.S. Congress, the oldest senator, whose name escapes me, who was like this very kind of right wing, deep South Republican who was in his late 90s and had been a senator since like the 1950s. This was 1997. He was making a speech in a really big auditorium on Capitol Hill, And there were like hundreds, maybe as many as 1,000 people in this big auditorium, like all the staffers and other Congress people and like interns and, everyone. And he basically started being really rude about the French, and saying like the French have not paid their dues to the United Nations, and just being super rude about the French. And as a sort of showy, offy 21-year-old moron that I was, for some reason, I decided to raise my hand in the Q&A and say, "Oh, Monsieur," it was Trent Lott was his name. "Monsieur Lott, I note with interest your comments about my country." So it's basically sort of taking the piss out of him and asking him really challenging questions in French in front of like all the other interns from Capitol Hill, which was probably a slightly ridiculous thing to do. But anyway, I'm not sure I could have come up with a much better story, but you put me on the spot. So yeah, being rude.
That's the whole point of putting you on the spot. If I give you the questions in advance, and that's the point of people getting to know you. Maybe we'll ask you one the next time as well. So
it shows that I was a very arrogant and foolish young man. Hopefully, I have a fewer rough edges now. I wouldn't try and embarrass a U.S. senator in front of 1,000 people nowadays. Now that I'm 50.
Fair enough, right? Fair enough, right? You had that rebellious streak in you from a young age, and the whole point is you've got to be foolish at a young age. Otherwise, as you said, living an extraordinary life, no point, right? Hey, I do have a financial consultancy called Success Simplified. So I ask most guests this question: how do you define success, Andrew?
For me, success, I've thought about this a lot. Success, it really is security. And so by which I mean, like, there's a number that's a few £1,000s a month, right? That if I know that I've built a business and I have investments, that basically can throw off that number consistently for every month for the rest of my life. And that means that my wife and my kids and me will be able to have a warm home and enough food on the table. And frankly, that number also includes an assumption of being able to travel a little bit and go on holiday and do whatever else. But basically, that's success to me, is that I've basically got to a number where my kids will never have to worry about not getting fed or having warm clothes or a warm home. And everything else. And, sadly, because of everything we've been talking about, it's harder than ever to deliver that. And sorry, the addendum to that is being able to deliver that number on my own terms, like deliver that number through my own investments, through my own business, not having to have a boss, right? So, because, it's a lot easier to deliver that number and just go and have a conventional job. I'm trying to do it as an entrepreneur and as an investor, right? But that number is still, it's not a garage full of sports cars. It's not like flying in private jets. It's not having to go to the coolest restaurant in the world that's got Michelin-starred nonsense. And I think, part of the epidemic of depression and unhappiness amongst a lot of our young people these days is they've got such misaligned. It's like, unless you're like the coolest person going Instagramming that you've been in the best restaurants in the world or the best nightclubs in the world, driving the coolest cars, going on a yacht, going to the coolest parties, you're not succeeding. I think that's a really, really dangerous and pernicious development in society. And people should stop posting selfies of themselves with Chanel handbags and think that somehow makes them better than the next person. That's just, I suppose I do it in a different way with books. Look at me, I've read loads of books, but I do think that's a fundamentally healthier social signifier than all the nonsense that too many young people are doing nowadays.
Fair enough. Thanks for sharing that. Yeah, everyone has their own drug, mate, but the whole point is you're correctly on point. Today's generation is just being led down a certain way, and I don't think that's a good pathway. But hey, again, we're not here to judge because, as I said, what we think is fine. And my grandfather used to tell me not to do certain few things, and I was like, what are you talking about? But when I look back, I'm like, oh, I wish I could go back to those simpler days sometimes.
Well, yeah, but like but I tell you what informs kind of what I was saying there is like, if we have an epidemic of unhappiness, and then the psychologists are telling us after decades of research that, competitive consumption will make you unhappy, right? Particularly if you get yourself into loads of financial trouble and loads of credit card debt in your 20s to do that. Like so many young people, so many young men are like spending money they don't have to impress girls, and so many girls are spending money. So, and so then they end up in their late 20s in all sorts of trouble financially. Funnily enough, they then have serious mental health problems because life is really hard and they've got to recover from like being thousands of dollars in debt for a completely ephemeral thing. And the point about, for me, where I really feel passionate about this ethically, is also that sort of behavior means that by the time, these are the sorts of people who end up at the age of 60 with nothing, right? And they have to rely on the state. So they were amazing in their 20s. I'm the king of the nightclub, and models and bottles and Chanel handbag and all that bullshit. And they're the ones in their 60s that, oh yeah, I didn't save anything. Finance is boring. I never did any of that. And the rest of society has to pay for them. And that really pisses me off, if I'm honest, because that is an awful lot of British society behaves like that.
And they have an acronym to justify it as well. YOLO, supposedly you only live once, so they could just get on with it.
You can only live once and still save 10% of your income every month forever for your whole life. Like, you just have to be a little bit more sensible. And
those people who used to tell me that, YOLO, I said, no, you live every day. You only die once. You live every day. So you need enough money to live every day instead of you just live once, right? So it's about educating these young. Again, I used to be quite judgmental, and I used to go, why aren't people doing this? And I've just kind of come to that conclusion now. Not everyone's on the same wavelength. Not everyone's had the chance to even read these books or even afford those books in some places. And I've made it kind of my thingy is, yes, this podcast and everything costs me money, but people who want to put in the time to sit for 2 hours and listen to it, they have free education here on the podcast to understand from the smartest minds in the world of what it takes to protect their assets and stuff. Of course, the consultancy is on the side, but this is a give back. And that's why, just like you, I'm passionate about actually early childhood schools. We should be teaching money. And financial education doesn't need to be when you're 18 and you think you're going to get a Bachelor of Commerce or an MBA. It needs to be basic at a very young age, so you understand the basics. And they teach you the rubbish. Oh, money is there to save and this and that, but they don't teach you how the monetary system works, which I think defeats the whole purpose. It's like asking someone to drive a Formula One car, but they don't understand anything about how to even inflate a tire, so to speak. So
100%.
All right, mate. Last question. Where can listeners learn more about you, Andrew? I'll put all the links, but please tell us.
Well, nowadays, I've spent 2 years building up our YouTube channel. So my YouTube channel is called Plain English Finance and Andrew Craig, which is sharp, really good branding. But yeah, it's the business called Plain English Finance. And then somebody said you should put your name up there because a lot of people know you by name from your books. And so that's Plain English Finance, Andrew Craig. And then from there, you can find everything else we do, like all my books on Amazon, and the website is plainenglishfinance.com. So that's the key stuff. But yeah, I mean, I'm really, really proud. You know, we've gone from 0 to like 19,000 subscribers in 2 years. And we're growing pretty nicely. So I hope that this time next year it's 40,000, and the year after that it's 80,000, and off we go, and we can help more people.
There you go, right. Exactly. That's the thing. And that's why I come on and tell people as well, like and share, so more people who can follow this kind of content as well, right? Because that's the most important thing. Is there anything else that I might not have covered that you wanted to discuss at all, Andrew? Or?
No, I think we should let your poor audience go. But I'd love to come back on and let's do an hour and a half next time, which I'm sure we could do 10 hours if you gave us half a chance. But that was probably a better idea.
Yeah, sure. Again, I want to thank you for your time, Andrew. It's been a pleasure.
You're very welcome. It's been an honor. Thanks so much.
If you're getting value from these interviews, please take a second to like this video and hit subscribe. Thank you for being part of the journey. Stay curious and keep connecting the dots. Thanks.